Sir, very happy morning to all. Sir, we are going to start the quick revision of the amalgamation of companies. We know that there are two types of amalgamations are there. Amalgamation in the nature of merger and amalgamation in the nature of purchase. Two companies are there. ரொம்ப சிம்பிளா அழகா குயிக்கா ரீகால் பண்ணிக்கோ. ரெண்டு கம்பெனி இருக்கும் அமால்கமேஷன்ல. ஒன்னு ஸ்டூடெண்ட்ஸ் லிமிடெட், ரெண்டாவது ANM லிமிடெட். ஸ்டூடெண்ட்ஸ் லிமிடெட் தான் எப்பவுமே செல்லிங் கம்பெனி, ANM லிமிடெட் தான் எப்பவுமே பர்ச்சேசிங் கம்பெனி. கரெக்டா? ஸ்டூடெண்ட்ஸ் லிமிடெட் அவங்களோட பிசினஸை விற்கிறாங்க. யாருக்குன்னா ANM லிமிடெடுக்கு. அதுக்கு ANM லிமிடெட் ஸ்டூடெண்ட்ஸ் லிமிடெடுக்கு PC தருவாங்க, பர்ச்சேஸ் கன்சிடரேஷன் தருவாங்க. அந்த பர்ச்சேஸ் கன்சிடரேஷன் கால்குலேட் பண்றது ANM லிமிடெடா இருக்கணும். அதை அக்ரி பண்றது ஸ்டூடெண்ட்ஸ் லிமிடெடா இருப்பாங்க. அதுக்கு ANM லிமிடெடுக்கு மூணு ஆப்ஷன், ஏன்னா ANM ங்கிறதுனால மூணு ஆப்ஷன் இருக்கு அந்த பர்ச்சேஸ் கன்சிடரேஷன் கால்குலேட் பண்றதுக்கு. ஒன்னு நெட் அசெட் மெத்தட், தட் மீன்ஸ் லைன் பை லைனா. சார் லைன் பை லைனா, ஹலோ சார் please English sir, I'm Gujarati sir. Oh sorry sir, I will use both sir, English and Tamil sir. Fantastic sir. So line by line, my dear lovable students, you have to add line by line. I have to take assets or liability, I have to value each individual assets and liability sir. Then I have to find out the purchase consideration. அதுக்கு சொல்ற பேர் தான் net asset method. Number 2, I am not going to value the students limited by asset side of the students limited. I am going to value the students limited by liability side of the students limited. That is called as net payment method. That means I will go and ask to the equity shareholders that how much consideration you need. I will go and ask to the preference shareholders that how much consideration you need. And அது ரெண்டையும் நான் ஆட் பண்ணிப்பேன். Then the amount what I am getting is called as the purchase consideration to the ANM students limited, which has to be going to be paid by the ANM limited. Comfortable sir? மூணாவது lump sum payment. Lump sum method in the sense means without valuing asset side, without valuing liability side. That means I am not following net asset method, I am not following net payment method. Simply my dear lovable students, நான் ஒரு லம்சமான ஒரு பேமெண்ட் கொடுக்குறேன். This is what ANM, right sir? Simple. So students limited has to close their books of accounts. It's a 5-step approach. Number 1, dismantling the balance sheet. அவங்க முதல்ல ஸ்டூடெண்ட்ஸ் லிமிடெட் அவங்களோட பேலன்ஸ் ஷீட்டை டிஸ்மேண்டில் பண்ணணும். Number 2, purchase consideration due. Correcta? Yes sir. According to students limited, they have to get PC from ANM limited. Number 3, receipt of purchase consideration. They have to get the purchase consideration from the ANM limited. Right then. Number 4, my dear lovable students, settlement to the preference shareholders. அவங்க வந்து preference shareholder என்ன பண்ணணும்னா settle பண்ணணும். Number 5, close the realization account and settle to the equity shareholders account. That is a 3-step approach. 5-step approach. Realize the assets not taken over, settle the liabilities not taken over, incur realization expenses. Number 4th one, find out the profit or loss on settlement to the preference shareholders, and the last one, settlement to the equity shareholders. இதுதான் ஸ்டூடெண்ட்ஸ் லிமிடெட் பண்ண வேண்டிய வேலை. Coming to ANM man, AS 14 is applicable only to ANM limited, not to the students limited, because students limited close ஆக போற கம்பெனி. கரெக்ட் தானே? அவங்களுக்கு ரூல்ஸ் அண்ட் ரெகுலேஷன்ஸ் பார்க்க வேண்டிய அவசியம். Whereas my dear lovable students, ANM limited is a company, they are going to continue. So you have to properly record the things in the ANM limited. அப்ப AS 14 is applicable only in the books of ANM limited. நீங்க ANM limited பொறுத்த வரைக்கும் நீங்க என்ன பார்க்கணும்னா, sir, whether the amalgamation is amalgamation in the nature of merger, amalgamation in the nature of purchase. Amalgamation in the nature of merger ரொம்ப சிம்பிள் சார். சார் லைன் பை லைன் அடிஷன். என்னது? லைன் பை லைன் அடிஷன், எக்ஸாக்ட்லி சேம் as consolidation. That's what. அதான் என்னன்னு சொல்றதுன்னா amalgamation in the nature of merger. Amalgamation in the nature of purchase னா எனக்கு என்ன தேவைப்பட்டதோ அதை மட்டும் தான் நான் எடுத்துப்பேன். Only those items I will take, my dear lovable students. Other item I will not take. That is called as amalgamation in the nature of. With this background, we are going into question number 1, a quick recall, quick revision. Consider the following balance sheet of X limited and Y limited as at 31st March 2021. Equity and liability has been given. Shareholders fund, my dear lovable students, share capital. This is the amount of share capital. Reserves and surplus, long-term borrowing, trade payable, other current liabilities. This is the total 9,900 and 6,600. Right, sir. Property, plant and equipment 6325 3600. Non-current investments 700 500. Inventory 1250 950. Trade receivable 900 1030. Cash and cash equivalent 725 and 520. 9900 and 6600. Sir, someone is asking that Hindi mein baat karo. Tambi Hindi मालूम नहीं है तंबी. Only English मालूम है, Tamil मालूम है. Correct? I think that today if you are going to write your examination, don't waste your time. You go and revise whatever you have studied, or some good faculties would have put some lectures in Hindi. Please go and watch, because I don't know Hindi. Don't waste your time. Thank you. Bye bye from ANM. Alright, sir. I'm continuing, sir. Notes to account, sir. Share capital, equity share capital given, preference share capital given, reserves and surplus given, long-term borrowings given, sir, property, plant and equipment given, non-current investment given, X Limited takes over Y Limited on 1st April 2021. Super, sir. அப்ப X Limited யார் எடுத்திருக்காங்க? Y Limited எடுத்திருக்காங்க. X Limited discharge the purchase consideration as follows. Yes. So X is ANM Limited, my dear lovable students, and Y is the Students Limited. Correct? அப்ப X Students Limited க்கு என்ன தரணும்னா purchase consideration தரணும். Sir, issued 3,50,000 equity shares of 10 each at par to the equity shareholders of Y Limited. That means 3,50,000 into 10 comes to 35 lakh. Issued 15% preference shares of 100 each to discharge the preference shareholders of Y Limited at how much percent premium? 10% premium. அப்ப நேரா போய் Y Limited ஓட preference share capital பாரு. Sir, 17 lakhs. 17 lakhs into 110%. 17 lakhs into 110% comes to how much? 18 lakh 70,000. Comfortable, sir? That's it, man. 35 lakhs plus 18 lakh 70,000 comes to 53 lakh. 53 lakh 70,000 is the total PC ANM is going to pay to the students. Debentures of Y Limited will be converted into equivalent debenture of X Limited. We all know that debentures form part of debt, not form part of the owner's equity. Hence, whatever amount ANM is settling to the debenture holders will not form part of the PC. Statutory reserves of Y Limited are to be maintained for how many more years? Show the journal entry, balance sheet of X Limited after amalgamation on the assumption that amalgamation is in the nature of merger and amalgamation is in the nature of purchase. Super. One question we are going to solve. Amalgamation in the nature of merger and also amalgamation in the nature of purchase. Simple, my dear lovable students. Ninga, whether the amalgamation in the nature of merger or not, I will quickly tell you a shortcut, one line shortcut with that merger will comes to an end. Just see the share capital including reserves and surplus before amalgamation. What is the Y Limited share capital, equity share capital? 3,000. Preference share capital 1,700. That means 3,000 plus 1,700 comes to 4,700. Comfortable, sir? Plus reserves and surplus, my dear lovable students, 250 plus 200 plus 100 plus 500, total 1,050. So 4,700 plus 1,050 comes to 5,750. So 5,750 is the equity share capital plus reserves and surplus before amalgamation. அது அமால்கமேஷன் ஆவறதுக்கு முன்னாடி என்கிட்ட 5,750 rupees ஓட வெல்த் இருந்துச்சு கம்பெனிக்கு. கரெக்டா? What is the PC purchase consideration I am going to get, man? Sir, 5,370. கரெக்டா? 5,370. இதுதான பர்ச்சேஸ் கன்சிடரேஷன் கொடுக்க போறாங்க. ஈக்விட்டி ஷேர்ஸ் ஆகும் பிளஸ் preference shares ஆகும். டோட்டல் 5,370 அப்படின்னா 53,70,000. இங்க 57,50,000 இருந்துச்சு. இப்ப 53,70,000 இருக்கு பிசி. கரெக்டா? எஸ் சார். வாட் இஸ் த டெல்டா கேப்? 3,80,000 is the gap. Right. So always if the amalgamation is amalgamation in the nature of another merger, my dear lovable students, நீங்க என்ன பண்ணணும்னா you have to compare the share capital and the purchase consideration. Share capital and இப்ப நான் வரேன், then I will explain. Sir, we got the PC as 53,70,000. That's what business purchase account debit to liquidator of Y Limited. இதான் first one ANM Limited ஓட booksல first entry. Am I right, sir? Then sundry assets of Students Limited account debit. Sundry assets means you have to take all the assets of the balance sheet. Go to the balance sheet and see the sundry assets man. Students limited la calculator ellame setha 6000. Don't do like that individually debit each and every asset. Correct dane? In examination, but revision I am doing in a sir single 6600. Right sir? 6600. General reserve account debit. Keep this general reserve. This is a reserve adjustment. We will come to the reserve adjustment at the appropriate time. Are you really with me? Next one. Sundry liabilities of Y Limited. Look at the balance sheet and tell me what is the sundry liabilities of Y Limited. Sundry liabilities. Liabilities part solunga balance sheet la. Total sir 150 plus 350 plus 350 comes to 850 is the sundry liabilities. Abdiya liability abdiya credit panna vendiyada to sundry liabilities 850. To export profit reserve. Now since this is amalgamation in the nature of merger, it's a what by what addition. Line by line addition. All the assets and liabilities of the students limited will become the assets and liabilities of the ANM limited. That's it, game over. Are you really with me? Abdina, my dear lovable students, நீங்க என்ன பண்ணனும்னா including reserves and surplus also you have to take to the books of the ANM. Go and see the reserves and surplus. What is the list of reserves and surplus? General reserve 250, export profit reserve 200, investment allowance reserve 100, profit and loss account 500. Come on man. So I'm putting investment allowance reserve 100, profit and loss account another 500, and to business purchase 5370, which is nothing but the purchase consideration. So here I have closed the purchase consideration. Correct sir? Are you really with me sir? That's it, my dear lovable students. இப்போ இங்க என்ன நடக்குது? What is this general reserve? This explanation is called as amalgamation in the nature of merger. அதை நான் explain பண்ணிட்டேன்னா amalgamation nature of merger முடிஞ்சு போயிடுச்சு. இப்போ நான் என்ன கேட்கறேன்னா சார் பிஃபோர் அமால்கமேஷன் ஸ்டூடெண்ட்ஸ் லிமிடெட் கையில் எவ்வளோ ஷேர் கேபிட்டல் பிளஸ் ரிசர்வ்ஸ் அண்ட் சர்ப்ளஸ் இருந்துச்சு? ஷேர் கேபிட்டல் பிளஸ் ரிசர்வ்ஸ் அண்ட் சர்ப்ளஸ் எவ்வளோ இருந்துச்சு? 5750. அதை தான் 5750 நீங்க சொல்றாங்க. Are you really with me? My dear lovable students, இப்போ difference between the amount recorded as the என்ன capital issued, share capital issue, and already issue பண்ண share capital க்கும் and amount of share capital of the என்ன company, transferor company. இப்போ நீ எங்க போயிருக்கேனா ANM லிமிடெட்ல போயிருக்க. அங்க உனக்கு என்ன கேபிட்டல் கொடுத்திருக்காங்க? ஷேர் கேபிட்டல் கொடுத்திருக்காங்க. கரெக்ட் தானே? அப்ரிஷியேட் பண்றியா இல்லையா? அப்ப நான் அமால்கமேஷன் ஆவருக்கு முன்னாடி ஸ்டூடெண்ட்ஸ் லிமிடெட் இன்க்ளூடிங் ரிசர்வ்ஸ் அண்ட் சர்ப்ளஸ் எனக்கு எவ்வளவு? 57,000, 57,50,000. கரெக்டா? இதுல யாரும் இருக்கா? ரிசர்வ்ஸ் அண்ட் சர்ப்ளஸ் இருக்காங்க. ஷேர் கேபிட்டல் மட்டும் 4,700. 4,700 ஷேர் கேபிட்டல், ரிசர்வ்ஸ் அண்ட் சர்ப்ளஸ் 1,050. 1,050. கரெக்ட் தானே? இது ரெண்டும் சேர்த்து தான் 5,750. ரொம்ப சிம்பிள் சார், ரொம்ப ரொம்ப சிம்பிள். நான் ஸ்டூடெண்ட்ஸ் லிமிட்டடா இருக்கும்போது என்னோட வர்த் 5,750. அவ்வளவுதான் மேட்டர் ஓவர். இப்ப நான் ஏஎன்எம் லிமிடெட் கூட சேர்ந்துட்டேனா? ஏஎன்எம் லிமிடெட் இஸ் a continuing கம்பெனியா நியூ கம்பெனியா? கண்டினியூவிங் கம்பெனி. ஆல்ரெடி அவங்களுக்கு என்ன இருக்குன்னா ரிசர்வ்ஸ் அண்ட் சர்ப்ளஸ் இருக்குமா? எஸ் சார். அப்ப நான் அங்க போகும்போது எனக்கு இந்த அமௌண்ட் அப்படியே எனக்கு என்னவா தரணும்னா ஷேர் கேபிட்டலா தரணும். எங்க? அங்க. என்ன காரணம்னா அங்க இருக்கிற ரிசர்வ்ஸ் அண்ட் சர்ப்ளஸ் எல்லாமே ஓல்ட் ஈக்விட்டி ஷேர் ஹோல்டர்ஸ் தான் இருக்கும். அவங்க சம்பாரிச்சது தானே, அவங்களோட வேர்வை தானே. ஆனா இதுக்கப்புறம் நான் அந்த கம்பெனியில் ஈக்விட்டி ஷேர் ஹோல்டர் ஆயிட்டேன்னா மை டியர் லவபிள் ஸ்டூடெண்ட்ஸ், ஐ ஆம் ஆல்சோ என்டைட்டில் டு ஷேர் இன் தி ரிசர்வ்ஸ் அண்ட் சர்ப்ளஸ். அதுக்கப்புறம் ஏஎன்எம் லிமிடெட் டிசால்வ் ஆகுதுன்னா, அதுக்கப்புறம் ஏஎன்எம் லிமிடெட் இன்னொருத்தர் கூட அமால்கமேட் ஆகுதுன்னா, when you dismantle the balance sheet மொத்த அமௌண்ட் எல்லா ஈக்விட்டி ஷேர் ஹோல்டர்ஸ் போயிடும்ல. இப்ப நான் அமால்கமேஷன் ஆவறதுனால என்னோட வெல்த் கம்மியாக கூடாது. என்னோட வெல்த் கம்மியாக, எனக்கு அமால்கமேஷன் ஆவறதுக்கு முன்னாடி எனக்கு எவ்வளவு வெல்த்? 5,750 இஸ் மை வெல்த். ரைட்டா? அப்ரிஷியேட் பண்றியா? அங்க எனக்கு ஷேர் கேபிட்டல் பர்ச்சேஸ் கன்சிடரேஷன் எனக்கு அங்க எவ்வளவு தராங்க? 53 lakh 70,000 தராங்களா? எப்படி எல்லாம் தராங்க? equity share capital how much? 35 lakhs. கரெக்ட் தானே? 35 lakhs. preference share capital how much? 18 lakh 70,000. ஒத்துக்கிறியா? 18 lakh 70,000. வா, 18 lakh 70,000. இது ரெண்டையும் கம்பேர் பண்ணேனா கேட்கல, டக்குன்னு சொல்லு. 53 lakh. 53 lakh 70,000 is the purchase consideration. அப்ப முன்னாடி when you are in students limited உன்னோட வெறும் share capital எவ்வளவுதான் இருந்திருக்கு? This is before amalgamation. This is before amalgamation உன்னோட share capital 4,700. Comfortable? Sir, after amalgamation உனக்கு தரப்போற PC purchase consideration how much? 5,300. Wow. 5,370. 370. Correct தானே? அப்ப ஆஃப்டர் அமால்கமேஷன் உனக்கு ANM லிமிடெட்ல உன்னோட வெல்த் 5,370 ஆக போகுது. கரெக்டா? அதான் இங்க போட்டிருக்காங்க பாரு 5,370. சொல்லு ஒரு வாட்டி. வாவ். சொல்லு. ஏன்னா நீ எங்க இருக்கும்போது ஸ்டூடெண்ட்ஸ் லிமிடெட்ல இருக்கும்போது மை டியர் லவபிள் ஸ்டூடெண்ட்ஸ் உன்னோட ஷேர் கேபிட்டல் வரும் 4,700 தான் இருக்கு. நல்லா இருக்குல்ல? ஏன்னா அமால்கமேஷன் ஆனதுனால உனக்கு ஒரு ப்ராஃபிட் வருதா இல்லையா? அப்ப 5,370 minus 4,700 comes to 670 is the increase in என்ன capital? Share capital. அப்படிலாம் ஆகக்கூடாது. அப்படிலாம் ஆகக்கூடாது. அதே ஆவற because amalgamation in the nature of என்னன்னா mergerனா my dear lovable students it is line by line addition. line by line add பண்ணா அதே தானே வரணும். 1 plus 1 is equal to 3 எல்லாருக்கும் தெரிஞ்ச விஷயம் தான். 2 அப்படிதானே வரணும். அப்ப 3 வருதுன்னா அதனை அட்ஜஸ்ட் பண்ணுமா வேணாமா? அதான் ஒன்று சொல்றோம். அப்போ ஒரே ஒரு சிம்பிள் ரூல். see the சொல்லு share capital before amalgamation. see the share capital after amalgamation. What is the share capital before amalgamation? 4,700 ரூபாய் இருந்த ஷேர் கேபிட்டல் சார் என்ன ஆகுதுன்னா 5,370 ஆகுது. கம்ஃபர்டபிள்? அப்போ உனக்கு எவ்வளவு எக்ஸ்ட்ரா வருது? 670 எக்ஸ்ட்ரா வருது. வர அதனால நீ என்ன பண்ணணும்னா அந்த ரிசர்வ்ஸ் அண்ட் சர்ப்ளஸ் நீ எடுத்துட்டு போற இல்லையா, அந்த ரிசர்வ்ஸ் அண்ட் சர்ப்ளஸ் மைனஸ் பண்ணிடணும். ரிசர்வ்ஸ் அண்ட் சர்ப்ளஸ் இருந்து சார் நம்ம ஆளுக்கு ஸ்டூடெண்ட்ஸ் லிமிடெடுக்கு ஜெனரல் ரிசர்வ் இருக்கா? எஸ் சார். எவ்வளவு ஜெனரல் ரிசர்வ் பார்த்து சொல்லு. 250 தான் ஜெனரல் ரிசர்வ் இருக்கு. ஆனா இன்கிரீஸ் இன் ஷேர் கேபிட்டல் எவ்வளோ? 670. அப்ப 670 250ல இருந்து 670 மைனஸ் பண்ணினா இன்னும் எவ்வளவு இருக்கு? 420. அத ஜெனரல் ரிசர்வ் டெபிட் பேலன்ஸ் காட்டணும் 420. சிம்பிள். இப்போ இந்த ஜெனரல் ரிசர்வ் நான் என்ன பண்ணுவேன்னா சார் ANM கிட்ட சார் in this 420 my dear lovable students sir, many people are requesting in English. Okay, I will be mixing sir. Gautam, I will try to say in English and little bit of Tamil. Okay. So already ANM is having general reserve. Yes sir. How much? 250. No, not students. Students already zero man. Made it zero man. What is the general reserve of the ANM? 500. Against that this 420 I will knock off. So balance how much will come? So if you see the balance sheet of the ANM after the reserves and surplus will be 80 will be the general reserve. That's it. Game over. Sir, amalgamation in the nature of merger over sir. அவ்வளவுதானா சார்? அப்ப மர்ஜர் சொல்லு பார்க்கலாம். see share capital before amalgamation. see the share capital after amalgamation. யாரோட இது? Students Limited. There should not be any profit or loss for the Students Limited because of amalgamation. That's it. If the share capital increases, my dear lovable students, reduce from the reserves and surplus. If the share capital reduces, Students Limited would not have accepted that amalgamation at all. Point number 1. If they accepted, leave it. Don't adjust in the reserves and surplus. Right, sir? That's it. Game over, sir, my dear lovable students. This entry over. Next one, settle the purchase consideration. Liquidator of Y Limited. How much is the PC? 5,370 to equity share capital because 3,50,000 equity shares at the rate of 10 each. Sir, how much comes to? 35 lakh to 15% preference share capital 1,870. Sir, don't record security premium and all. That security premium will be there to the Students Limited, not for the ANM Limited. Comfortable, sir? Now they are to convert the debentures. Sundry liabilities in Y Limited. 13% debenture in Y Limited is how much? 350 to 13% debentures is also 350. Comfortable? Come to the line by line addition, my dear lovable students. line by line addition, we'll do consolidation. Share capital, already, you look at the question and tell me, already what is the share capital of the ANM Limited? How much? 7,200 plus what is the newly issued share capital? Per rendu perku issue pannirkingla 3,500 plus 1870 comes to 5370. Rendu add panna 7,200 plus 5370 comes to, that's what 12,570. Can I, sir, adjust the reserves and surplus? Sir, reserves and surplus actually according to ANM, sir, it's a loss. In the loss in the sense means, evlo rupees share capital irukra company? 4,700 share capital company has been bought for 5370. So there is a loss of, total loss of 670 that we already adjusted against their general reserve of 250, but still there is a general reserve debit balance of 420 that we have to adjust against that. Come on. General reserve, X Limited, already ANM 500. Sir, students 250. Total comes to 750. Adjustment for amalgamation, extra 670. That means the difference 80. Export profit reserve, already ANM are having 300. Students is having 200. 300 plus 200. Investment allowance reserve 100. Profit and loss 750. Add profit and loss of students 500. Total 1250. Total come to 1930. This 1930 will be carried over here. Comfortable? Simple man, sir, long term borrowing. Next item. You tell me students long term borrowing how much? 350 plus ANM 500. Total, that's it, 850. Trade payable, you tell me, sir, ANM 450. Students 350. 450 plus 350. That's it, game over. Other current liability, ANM 200 plus students 150. Total comes to 350. That's it, total 16,500. Comfortable? Property, plant and equipment. Tell me, sir. Sir, number one. Full PP of the ANM 6,325. Full PP of the students 3,600. Put together 9,925. Easy, no? Sir, non-current investment, my dear lovable students. Tell me what is for ANM? 700. What is for students? 500. Total comes to 1,200. Inventory, what is for ANM? 1,250. What is for students? 950. 1,250 plus 950. 2,200. Trade receivable, my dear lovable students. What is for ANM? 900. What is for students? 1,030. Total comes to 1,390. Cash and cash equivalent. 725 for ANM. 520. 524 students. Total 1,245. That's it. That's it. Amalgamation in the nature of merger comes to an end. Are you really with me? Enna sir irukku? Onnume illa sir. Simple sir. Just compare the share capital. I'll ninge edella edukka koodaduna, don't compare with the including reserves and surplus and all, because adjustment day reserves and surplus da. Puriyudha illaya? Adjustment day enga da irukku? Reserves and surplus da irukku. So my dear lovable students, see the share capital of the students limited before amalgamation. See the share capital of the students limited after amalgamation in ANM Limited basically. If the share capital after amalgamation is higher than the share capital before amalgamation, that difference reduce from the reserves and surplus. That's it. Sir, the same question can I do with the amalgamation in the nature of purchase? My dear lovable students, easy, very easy. Don't take all, it's not a line by line item. Only take the assets and liabilities. Don't take the reserves and surplus. Right? Come on, man. Business purchase account debit to liquidator of Y Limited 53,70,000 already PC done. Sundry assets of Y Limited total we know that 66 lakhs. Am I right? To sundry liability 8,50,000. To business purchase 53,70,000. Comfortable? Look at the comparison. What is the, sir, 6,600 is the sundry assets of Y Limited. Yes, sir. 850 rupees is the sundry liabilities of Y Limited. My dear lovable students, 6,600 minus 850 comes to 5,750 is the net assets of the students limited. That means I'm supposed to pay only 5,750 to the students, right? But I have paid 5,370. Oh my God. Have I paid more or have I paid less? I paid less. I paid less. It's a profit, benefit to the ANM. Comfortable? So 5750 minus 5370 comes to 380 is the extra profit. Is this profit you got by doing normal in the course of furtherance of business? No, sir. In the course of amalgamation. So this profit should be credited to capital reserve. 3,80,000 rupees. Comfortable? Settle the PC. Liquidator of Y Limited 53,70,000 to equity share capital 35 lakh to 15% preference share capital 18,70,000. Comfortable? Convert the students limited debenture into ANM limited. These are common entry, my dear lovable students. 13% debenture in Y limited 3,50,000 to 13% debentures, sir, 3,50,000. Can I prepare the balance sheet? In balance sheet, reserves and surplus will change. Their reserves and surplus will be a line by line addition. Correct? அங்க என்ன ஆகும்னா amalgamation the nature of merger இருந்தா முன்னாடி எவ்வளவு equity share capital இருந்துச்சு? Earlier how much is the equity share capital? 4,700. அது இப்ப என்ன ஆக போகுது? 5,370. அப்ப 4,700 has become 5,370. Now share capital will increase and reserves and surplus will decrease. That's it. Comfortable? But இங்க அப்படி கிடையாது. அந்த set off நடக்காதீங்க. நீ என்ன பண்ணணும்னா what is the old share capital of ANM? 7,000 plus what is the newly issued share capital? 5,370. ரெண்டு சேத்தா 12,570. Comfortable, sir? Sir, whether it is amalgamation in the nature of merger or amalgamation in the nature of purchase, the share capital amount will be one and the same. Whereas reserves and surplus will not be one and the same. Sir, what is the capital reserve? இப்பதான் கண்டுபிடிச்ச நீ 380. This is the profit on amalgamation to the ANM limited. Comfortable? What is the general reserve of ANM? 500. I will not add line by line addition. I will not take care of the reserves and surplus of the students because this is amalgamation in the nature of purchase. Purchase in the sense means I will purchase only the assets and liabilities. I don't want the business as a whole. Are you really with me? Now, since you have not taken all the reserves and surplus, you have to maintain amalgamation adjustment reserve. Amalgamation, go to students limited. Is there any export profit reserve? Is there any investment allowance reserve? Yes, sir. For ANM, export profit reserve is there, not there? There are. How much there? 300. Upper 300 plus what is the export profit reserve of students? 300 plus 200 comes to. Sir, நீங்க தான் சார் சொன்னீங்க reserves and surplus எடுக்க மாட்டீங்க. தம்பி, reserves and surplus I will not take, but the statutory reserve I will take. What reserve? By passing a dummy entry, called as amalgamation adjustment reserve account debit. Open your mouth. Amalgamation adjustment reserve account debit to statutory reserve account. To என்ன விஷயம்னா the logic is very simple, man. Sir, the students limited has created statutory reserve. When they created the statutory reserve, the rules and laws are saying that you have to maintain the statutory reserve for how many years? But by the time of 3 years, they got amalgamated, right? Students limited cannot say to the ANM limited saying that, sorry sir, we have to keep statutory reserve for another how many more years? 2 years. I will get married after 2 years. Like that you can't say. Are you really with me? Now itself they will get married. Clear dane. So this statutory reserve will be maintained for the next how many years? 2 years by ANM limited. Comfortable? By passing a journal entry that amalgamation adjustment account debit to statutory reserve account. Comfortable? Actually, this amalgamation adjustment reserve should come in the debit side of the P&L, right? Asset side. Hello, sir. But where you are showing the statutory reserve under the head reserves and surplus. So what Companies Act 2013 Schedule 3 format is saying that there itself you reduce that. So automatically there will not be any impact in the amount of the reserves and surplus of the ANM limited. Comfortable? Once 2 more years over, you ulta this entry. What the ulta entry? What is entry you will pass? Statutory reserve account debit to amalgamation adjustment account. Automatically this will get closed. So this won't have any impact. Are you all really with me? That's it, man. Investment allowance reserve, sir, 100. Look at here. Inside this 500, how much 100 is there of students? Students. 200. Sir, this 100. 200 plus 100. This is what the 300 you have passed. Automatically knocked off for the time being. Are you ready with me? Surplus P&L account 750 already there. 1930 is the reserves and surplus, my dear lovable students. Long term borrowing 850. The same, one and the same. There is no change. Go to the old balance sheet, old balance sheet, 850, 800, 350. Hello, sir. The same man, 800, 850, 800, 350. Total will change. Kandipa. If reserves and surplus change, earlier what is the balance sheet total? 16,500. Correct? Now what is the balance sheet total? 16,500. Right? Yes, sir. Sir, what is the difference? Why total have not changed, sir? Because there I adjusted in the reserves and surplus. Correct? Here, what I have done is I have shown it as capital reserve. Are you really with me? Yes, sir. Come on, man. All these are one and the same. You will be getting 16,500 as a total. You have to write the notes to accounts, man. That's it. With regard to capital reserve, also 380 calculation we have done. That's it. With regard to amalgamation in the nature of merger and amalgamation in the nature of purchase. Are you comfortable? One line summary of the entire discussion is ANM can do amalgamation in two ways. Amalgamation in the nature of merger and amalgamation in the nature of purchase. Sir, if it is in the nature of merger, adjust reserves and surplus. What ANM will do? No, ANM will take care 100% of the assets and liabilities of the students, including reserves and surplus. Okay? Appa, we have to do the reserve adjustment. How to do the reserve adjustment? We have to see the share capital. Share capital mattumna paakano. Share capital of the students before amalgamation. Share capital of the students after amalgamation. If the share capital of the students after amalgamation is higher than the share capital before amalgamation, whatever extra is there, knock off from the reserves and surplus. Because the reserves and surplus share capital mari chavladam. It's like a capitalization of profit. Are you really with me? Simple. If it is less than the share capital, leave it, my dear lovable students. Leave it. Sir, capital reserve. Less than. Sir, earlier 200, correct? Now it has become 100. Kamiyacha. Earlier 200, now it has become 300. 200 enachana. Extra how much? Reduce from the reserves and surplus. That's what this question is saying. Sir, 200 enachana. 100 ஆச்சுனா லாஸ் கொடுத்துருக்காங்க. இவங்களுக்கு ரியலைசேஷன் என்னது? லாஸ். அண்ட் ஃபார் தெம் யாருக்கு ரியலைசேஷன் லாஸ்? ஸ்டூடெண்ட்ஸ்க்கே ரியலைசேஷன் லாஸ். ஏஎன்எம்க்கு என்ன சார் ப்ராஃபிட்? அது அவங்களோட புக்ஸில் கேபிட்டல் ரிசர்வ் ஆட்டோமேட்டிக்காக வந்துடும். ஆர் யூ ரிலேட் வித் மீ? நம்ம எதுவும் ஸ்பெஷல் அட்ஜஸ்ட்மெண்ட் பண்ண வேண்டிய? ஐ வில் கிவ் யூ 15 minutes ஆஃப் டைம். You settle with this question, amalgamation in the nature of merger and purchase. If you are settling after 10-15 minutes, I will come to question number 2 revision, which will be a very quick revision than this, my dear lovable students. If you are able to do pakka this question, come for next question number N. Comfortable, sir? So I'll be waiting here for 15 minutes to solve the question number 2. Sir, very happy morning to all. So we are doing the quick revision of the chapter amalgamation, my dear lovable students. In that one question we have already solved. I'm moving into question number 2. Can we start with illustration number N? Following are the balance sheet of A Limited and B Limited as a 31-3. They have given share capital, reserves and surplus. Look at the reserves of the B Limited. It is showing negative balance, Thambi. Long-term borrowing, trade payable, total, PPE, non-current investment, cash and cash equivalent. Okay. Share capital split they have given. P&L debit balance is showing for them. Long-term borrowing. B Limited has acquired the business of A Limited. B Limited has acquired the business of A Limited. யாரோட business acquire பண்ணிருக்கா? B வந்து A ஓட business acquire பண்ணிருக்கா. திமிர பாத்தியா? ஆல்ரெடி லாஸ் மேக்கிங் கம்பெனி. ஸோ அவங்களோட லாஸை முதல்ல செட்டப் பண்ணி பாரு. ஃபுட்பால் பார்த்துருக்கியா? இனிமே பாரு அப்படிங்க. Long-term borrowing, 10% debenture, loan from bank, okay, right. Following scheme of merger was approved. Merger was approved. B Limited agreed to waive off the loan of 60,000 of N Limited, B Limited. Bank என்ன சொன்னாங்கன்னா, B Limited கிட்ட loan இருக்கு இல்லையா, loan from bank இருக்கு இல்லையா, total 4,50,000 rupees. Out of that 60,000 rupees, already you are a loss-making company. You just keep this 60,000. You be happy. B Limited will reduce its share to எவ்வளோ per share? 10 per share. Then consolidate 10 such share into one share. For how much each? 100 each. That means they are doing first internal reconstruction just to remove their loss. Shareholders of A Limited will be given one share of B Limited in exchange of every share held in A Limited. A Limited lo ஒரு share vecha B Limited lo ஒரு share. Trade payable of B Limited include rupees 100,000 payable to A Limited, mutual owings, sundry creditors to sundry debtors entry போட்டு போயிட்டே இரு. Pass necessary journal entry in the books of B Limited and prepare the balance sheet after merger. Wow, that means they are testing IR and the amalgamation in the nature of merger. போட்டலாமா? அங்க ஒரு ஷேர் இருந்தா இங்க ஒரு ஷேர், கரெக்ட்டா இல்லையா? Yes sir. அப்ப அங்க ஒரு ஷேர்னா, come on sir, the share capital of the A Limited is 2000 ah. 2000 lakhs ah. என்னது? எவ்வளவு lakhs? 20 lakhs. 20 lakhs divided by what is the face value? டக்கு டக்குன்னு பிக் பண்ணுங்க. 100 each. அப்ப 20 lakhs divided by 100. அப்ப இங்கே நாங்க 20,000 shares தான் தருவோம். That's it. Game over. Are you all with me? That's what this 20,000 shares is all about. Come on. We'll be writing the journal entry for the IR. Quickly we have to write. Bank said that don't pay us 60,000 rupees. Right? So the entry will be loan from bank account debit. Liability reduce ஆகுது, அதனால debit பண்றேன். To capital reduction 60,000. Comfortable? Equity share capital account debit. I am doing, my dear lovable students, sir, 100 rupees face value of share I am reducing to 10 rupees. Correct? First I cancel the existing equity share capital. To equity share capital, my dear lovable students, to 10 each. Correct? To capital reduction, balance 900 will go to the capital reduction. ஏன்னா 100 ரூபாய் ஷேரை 10 ரூபாய் ஆக்கி மாத்திட்டேன். அப்ப 90 rupees capital reduction போயிச்சா? Now again I am doing consolidation. அது எதுவுமே இல்லை, அது ஃபேஸ் என்னதான் அமௌண்ட் மாறாது. equity share capital account debit 100 to equity share capital 100. Comfortable? My dear lovable students, இப்போ நான் capital reductionல பார்த்தேனா, first one 60 capital reduction இருக்கா, second point 900 capital reduction இருக்கா, that's it. 60 plus 900 comes to 960. அதுல I am writing off P&L to the extent of 800 to capital reserve 160. அட பாவி, loss making company இப்போ என்ன ஆயிடுச்சு? Profit making company ஆயிடுச்சு. Are you all with me? இதுக்கப்புறம் நான் யார் எடுத்துக்க போறேன்னா A Limited எடுத்துக்க போறேன். That to amalgamation in the nature of merger. A Limited oda balance sheet par line by line addition. My dear lovable students, before I do the line by line addition, I have to check what is the status of the share capital of the Students Limited before amalgamation. What is the share capital of the Students Limited before amalgamation? 2000. Are you all really with me? What is the share capital of the Students Limited after amalgamation? 2000. Same. So here there is no profit, there is no loss. So don't need to adjust anything in the reserves and surplus. It is pakka line by line addition. Right? What is the PPE of sir ANM? Sorry, PPE of students? 2700. Question path padi. Investment of students 700. Trade receivable of students 400. Cash at bank of students, basically asset account debit. Correct dane? To trade payable, my dear lovable students, liability 300. Loan from bank already எவ்வளவு இருந்துச்சு? அவனுக்கு இவனுக்கு சம்பந்தமே இல்லை. கரெக்டா? நீங்க கன்ஃபியூஸ் ஆக என்ன இருக்குன்னா வாய்ப்பு இருக்கு, கன்ஃபியூஸ் ஆக கூடாது. ரைட்டா? எஸ் சார். ஸ்டூடெண்ட்ஸ் ஓட லோன் ஃப்ரம் பேங்க் 250. 10% டிபென்ச்சர் ஆஃப் ஸ்டூடெண்ட்ஸ் 500. பிசி லிக்விடேட்டர் எவ்வளவு கொடுக்க போற? 2000. பிஃபோர் அமால்கமேஷன் ஆல்சோ 2000. ஆஃப்டர் அமால்கமேஷன் ஆல்சோ 2000. டு ரிசர்வ் 1000. யாரோட ரிசர்வ்? ஸ்டூடெண்ட்ஸோட ரிசர்வ். எவ்வளவு இருந்துச்சு பேலன்ஸ் ஷீட்ல ஸ்டூடெண்ட்ஸ்க்கு ரிசர்வ்? பார்த்து சொல்லுங்க. ரிசர்வ்ஸ் அண்ட் சர்ப்ளஸ் எவ்வளவு இருந்துச்சு? 1000. ஜெனரல் ரிசர்வ் இருந்துச்சா இல்லையா? அது ஏன் சார் அப்படியே அந்த ரிசர்வ் அப்படியே வருது? ஏன்னா there is no change in the share capital. In question number 1, what we have discussed, sir, the share capital after amalgamation is more than the share capital before amalgamation. That extra you release from the reserves and surplus. Here the share capital is equal to the share capital after amalgamation. ஒரு dash பண்ண வேண்டிய. Come on. Liquidator of A Limited 2000 கொடுத்துரு to equity share capital. Comfortable? Trade payable to trade receivable சொல்லி mutual owings என்ன பண்ணிடு? Cancel பண்ணிடு. That's it. Can I prepare the balance sheet after merger? இப்ப நீ என்ன பண்ணணும்னா முதல்ல ஆல்ரெடி ஐஆர் பண்ணிருக்காங்கல்ல அதோட எஃபெக்டையும் கொடுக்கணும், பிளஸ் அமால்கமேஷனோட எஃபெக்டையும் கொடுக்கணும். ரைட்டா? ஐஆர் பண்ணதுக்கு அப்புறம் வாட் இஸ் த ஈக்விட்டி ஷேர் கேபிட்டல் ஆஃப் ANM 100 already issued to students 2000. That's how 2100 came. Can I proceed? Reserves and surplus is very important man. இங்க பாரு, capital reserve 160 வந்துச்சு. எப்படி வந்துச்சு? After reconstruction. General reserve, this is the general reserve of the students limited. Total 1160. I have to just write 1160. Comfortable? Coming to long term borrowing, man, it's very easy, man. Add by line da. Sir, 10% debenture, how much? 500. Loan from bank already taken from students 250. ANM were having 450. I'll waive off 60. Up 450 minus 60 comes to 390 plus 250 comes to 640. 500 plus 640 comes to 1140. That's what 1140 long term borrowing. Comfortable? Trade payable line by line addition. No change. Trade payable. What is for? Sir, ANM 150. Students taken over. ANM 300. 300 plus students taken over. இல்ல சார் டேக்கன் ஓவர் எவ்வளவு சொல்லுங்க 300 300 plus 300 600 minus mutual owing இப்போ 500 I don't live with me simple sir short term borrowing sir ANM எதுவும் இல்ல students 50 டக்கு டக்குன்னு டேட்டா கொடுங்க 4950 PP sir what is the PP of the ANM 2700 taken over from students 2700 plus 850 3550. Non-current investment. What is of ANM? 700 plus 1000. 1000. என்ன சார் சொல்றீங்க 700 to ANM மட்டும் தான் இருக்கு கரெக்ட்டா trade receivable ANM 150 sir ANM sir students 400 total 550 ana minus mutual owings அப்படி 450 comfortable cash and cash equivalent what is for ANM nil sir plus students 250 net 250 you will get 4950 that's it done danaka done hello sir we have revised the question from the IR we have solved a question from amalgamation in the nature of it's a line by line addition exactly same of consolidation are you agree with me sir amalgamation in the nature of merger rule ஞாபகம் வெச்சுக்கோ see the share capital of the students limited before amalgamation see the share capital of the students limited after amalgamation if it is both are equal leave it I don't agree with me if the share capital after amalgamation is more than the share capital before amalgamation that extra should be reduced from the reserves and surplus comfortable that's it the second question revision in the morning my dear lovable students if you are comfortable that's it சார் நீங்க இந்த ரெண்டு क्वेश्चनமே ரிவைஸ் பண்ணி முடிச்சிட்டீங்க இப்போவும் உங்களோட மனநிலை ரொம்ப ஹாப்பியா தான் இருக்குனா ஒரு 10 மினிட்ஸ்க்கு அப்புறம் என் கூட வாங்க நான் உங்களுக்கு தேர்ட் क्वेश्चन ரிவைஸ் பண்ணி தரேன் இல்ல சார் ரெண்டு क्वेश्चनே எனக்கு கண்ட்ரோல் வரலனா ரெண்டு क्वेश्चन மட்டும் ப்ராப்பரா ப்ரிப்பேர் பண்ணுங்க ஏதாவது டவுட் இருக்குனா திருப்பி போய் வீடியோ ரெஃபர் பண்ணுங்க கம்ஃபர்ட்டபிள் we'll meet at the appropriate time my dear lovable students sir very happy morning to all so we are doing the revision of amalgamation actually we have done one question which is amalgamation in the nature of merger amalgamation in the nature of purchase second question was a good question sir IR then amalgamation in the nature of come on third question எந்த விதத்தில் போகுதுன்னு பாப்போம் following is the balance sheet of S limited sir no limited sir ரெண்டு company ஒன்னு yes and no reserves and surplus are positive so there is no IR correcta yes sir let it be there they have given something balance sheet notes to accounts all this will be there on that day S limited absorbed no limited so yes is the ANM limited and no is the students limited right up the members of no limited are to get one equity share of S limited issued at a premium of 2 per share for every 5 share held by them in no limited so I have to go and check man mottama equity share capital issued and subscribed total fine irukku 5 crores 5 kodi appo 5 crores divided by what is the face value 10 so 5 crore divided by 10 come to 50 lakhs divided by for every how many share 5 shares my dear lovable students correct dane sir for every 5 share held ANM will give how many share 1 share so about 50 lakhs divided by 5 comes to 10 lakh shares they will give but not at 10 rupees per share but at the rate of 12 rupees per share so 10 lakh into 12 comes to 1.2 crore is the purchase consideration comfortable That's it, man. Sir, the necessary approvals are obtained. You are asked to pass the journal entry in the books of 2 companies to give effect to the above with the amalgamation in the nature of merger. அப்போ super question, students limited போடணும். Students limited amalgamation of merger purchaseங்கிற கான்செப்டே கிடையாது. Then number 2, my dear lovable students, நீ என்ன பண்ணணும்னா ANM limited போடணும். ANM limitedோட amalgamation in the nature of merger. அப்ப நீ reserves and surplus adjust பண்ணி தான் ஆகணும். ஏன்னா what is the share capital of the students before amalgamation? எவ்வளவு இருந்துச்சு? 5 crores. ஆனா இப்ப எவ்வளவு வருதுன்னா 1.2 crores தான் வருது டோட்டலாவே. அப்ப ஷேர் கேபிட்டல் என்ன ஆகுது? கம்மி ஆகுது. கம்மியானா எதுவும் பண்ண வேண்டிய என்ன இல்லை அவசியம். ஈக்குவலா இருந்தா எதுவும் பண்ண வேணாம், கம்மியா இருந்தா எதுவும் பண்ண வேணாம். ஆனா அதிகமாச்சுன்னா surplus. Come on, sir. Sir, look at first one. Sir, can we dismantle the balance sheet of the students limited? Dismantling of balance sheet. Step number 1. Go to the asset side of the students limited. டக்குன்னு எனக்கு இன்ஃபர்மேஷன் கொடுங்க. asset sideல PPE value யாரோட இது? 6 crores PPE டோட்டலா எல்லா சேர்த்து, எல்லா PPE சேர்த்து. depreciation மைனஸ் பண்றதுக்கு முன்னாடி சார் gross value சார் 30 sir. So to PPE 30 crores. Correct sir? To current asset value எவ்வளவு sir? 34 crores. Appreciate பண்றியா? Simple sir. அப்ப இதான் sir realization account debit. என்னது? Realization account debit. To PPE gross 30 crores. Current asset 34 crores. அவ்வளவுதான். Dismantling of asset side comes to an end. முடிச்சாச்சு. Realization account debit பண்ணிட்டேன். இப்போ நீ என்ன பண்ணனா எல்லா லைபிலிட்டி சேல் அங்கதான் நீ ப்ரொவிஷன் ஃபார் டெப்ரிசியேஷனை க்ளோஸ் பண்ணணும். எவ்வளோ crores? 24 crores. கரெக்ட் தானே? அது இங்க தான் வருது. தென் தி நெக்ஸ்ட் ஒன் கரண்ட் லைபிலிட்டி 15 crores. Unsecured loan from S Limited 10 crores. To realization 49 crores. Understanding? That's it. Dismantling of liability side done. Except share capital. Share capital நம்ம பண்ணிடலாமா? Yes sir. Varaja equity share capital account debit 5 crores. Reserves and surplus 10 crore. அது எல்லாமே யாருக்கு போய் சேரணும்? Equity shareholder 15 crores. Comfortable sir? Yes sir. இப்போவா next that's it நினைக்கிறேன். Sir, dismantling of என்ன sir balance sheet comes to one. Purchase consideration due வச்சிரு. Entry ANM limited account debit to realization account 1.2 crores அதை ரிசீவ் பண்ணிடு. என்னது? Equity shares of ANM limited account debit to ANM limited 1.2 crores preference shares இருக்கா இல்லையா? இல்ல சார், preference shares இல்ல சார் क्वेश्चनல. இருக்கா? இல்ல சார். அதனால செட்டில்மென்ட் preference shareholders போட வேண்டிய assets not taken over ஒரு கான்செப்ட் கிடையாது. liability not taken over ஒரு கான்செப்ட் கிடையாது. realization expense ஒரு கான்செப்ட் கிடையாது. then settlement to the preference shareholderல profit or loss பார்க்க வேணாம். can I close the realization account? இப்போ நீ பார்த்தேனா realization accountல 49 crores credit ஆயிருக்கா? yes sir. 64 crores debit ஆயிருக்கா? அப்ப 49 plus 1.2 49 plus 1.2 டக்குன்னு சொல்லு. 50.2 minus 64. Actually debit side அதிகமா இருக்கு, credit side கம்மியா இருக்கு. கரெக்ட்டா? debit side எவ்வளவு அதிகமா இருக்கு? 13.8 crores. இதுதான் என்ன லாஸ்? realization loss. appreciate பண்றியா? இது யார் பேர் பண்ணா? equity shareholders பேர் பண்ணும். equity shareholders account debit to realization account 13.8 crores. ரைட்டா? இப்போ மூஞ்சி பாரு. what is the share capital before amalgamation? டக்குன்னு சொல்லு. students limited ஓட இது 5 crore. reserves and surplus 10 crore. 5 plus 10 15 crores. What is the PC? 1.2 crores. 15 minus 1.2 அவ்வளவுதான் 13.8. It's a realization loss வந்துச்சு. 1 second answer got. Are you ready with me? அதுக்கு தானே இவ்வளவு போடுறான். வா மேட்ருக்கு வா. சார் இப்போ equity shareholder செட்டில் பண்ணிடுறேன். equity shareholders account debit 1.2 crore to equity shares of S Limited 1.2 crores. That's it. Sir, I have done with the journal entries in the books of the students limited. It's a எத்தனை step approach? Number 1, dismantling of the balance sheet. Purchase consideration due, receipt of purchase consideration, settlement to the preference shareholders, closing the realization account and settlement to the equity shareholders. Can I come to journal entry in the books of S Limited? Yes mean yaru? ANM. Sir, business purchase account debit to liquidator of no limited 1.2 crores. இப்போ you have to record all the assets and liabilities line by line item. You go and see. PPE, what is the net value? எனக்கு gross தேவையே இல்லை, எனக்கு நெட் போதும். கரெக்டா? What is the PPE net value? 6 crores. Current asset 34 crores. That's it. To current liability 15 crores. unsecured loan from S Limited. My dear lovable students, எவ்வளோ 10 crore. இது mutual owings. கடைசியா நம்ம க்ளோஸ் பண்ணிடுவோம். இன்னும் 2 ரிப்போர்ட் கரெக்டா? To business purchase 1.2 crores. Sir, what is the reserves and surplus of the Students Limited? 10 crores. அது அப்படியே ரெக்கார்ட் பண்ணு, ரைட்டா? இப்ப ஆக்சுவலா நீ பார்த்தேனா ANM is having a profit. ANM is having a profit. I don't really with me. Whereas அங்க லாஸ் இருக்கு. எங்க லாஸ் இருக்கு? ஸ்டூடெண்ட்ஸ் லிமிட்டட்ல ரியலைசேஷன் லாஸ் இருக்கு. எவ்வளவு ரியலைசேஷன் லாஸ்? 13.8 crores ரியலைசேஷன் லாஸ். கரெக்டா? அப்ரிஷியேட் பண்றியா? பட் ANM க்கு ப்ராஃபிட் தானே. ஏன் ப்ராஃபிட்னா கேன் ஐ ஃபைண்ட் அவுட் த நெட் அசெட் ஆஃப் த ஸ்டூடெண்ட்ஸ் லிமிட்டடா? கால்குலேட்டர்ல 6 plus 34 போடு. 40 சார். minus 15 போடு. 25 சார். minus 10 போடு. 15. அவ்வளவுதான் சார். 15 crores is the net worth of the Students Limited. Are you agree with me? இந்த 15 crores-ல 1.2 crores தான் பே பண்ணியிருக்காங்க. அப்படின்னா 15 minus 1.2 13.8 தான் டோட்டல் ப்ராஃபிட். ஆனா அதுல 10 crore ஆல்ரெடி ரிசர்வ்ஸ் சர்ப்ளஸ் வந்துச்சு. அப்படின்னா மைனஸ் 10 crore 13.8 minus 10. இதுதான் P&L அக்கவுண்ட் 3.8. Are you agree with me? இத P&L அக்கவுண்ட் போடுறதை விட கேபிட்டல் ரிசர்வ் போடுறது பெட்டர். என்ன காரணம்னா this is amalgamation, not a business operation, ரைட்டா? அதனால தான் ஸ்டார் போட்டிருக்காங்க. அதனால தான் P&L கிரெடிட் பண்றதுக்கு பதிலா கேபிட்டல் ரிசர்வ் போடுங்க. Are you really with me? நீங்க பிசி கொடுத்து செட்டில் பண்ணிருங்க. லிக்விடேட்டர் ஆஃப் நோ லிமிட்டட் 1.2 crores, equity share capital 1 crore, security premium 0.2. பிகாஸ் क्वेश्चनலே சொல்லிருக்கா 2 ரூபாய் பிரீமியத்துல செட்டில் பண்றாங்க. கரெக்ட்டா? மியூச்சுவல் ஓவிங்ஸ் க்ளோஸ் பண்ணிருங்க. unsecured loan 10 crore to loan to no limited 10 crore. That's it. Already என்ன சார் you got 1.2 crores as the purchase consideration. Are you able to appreciate? So in this question the lesson is very simple. If the equity share capital before amalgamation, you have to compare, and equity share capital after amalgamation. If the equity share capital after amalgamation of the NL Limited, Students Limited is less than the equity share capital before amalgamation, ignore. நீ எதுவும் ஸ்பெசிஃபிக்கா பண்ண வேண்டிய அவசியம் இல்லை. ரிசர்வ்ஸ் எதுவும் அட்ஜஸ்ட் பண்ண வேண்டாம். ஆட்டோமேட்டிக்கா ரிசர்வ் என்ன ஆயிடும்னா அட்ஜஸ்ட் ஆயிடும். கரெக்டா? என்னவா இருந்தா மட்டும்தான், அதிகமா இருந்தா மட்டும்தான் நம்ம என்ன பண்ணோம்னா மேனுவலி ரிசர்வ்ஸ் அண்ட் சர்ப்ளஸ் மைனஸ் பண்ணோம். 3 வெரைட்டி क्वेश्चन போட்டாச்சு நம்ம. வெரைட்டி நம்பர் 1 மர்ஜர்ல equity share capital after amalgamation is higher than the equity share capital before. எவ்வளோ எக்ஸஸ் கேபிட்டல் இருக்கோ அதை ரிசர்வ் சர்ப்ளஸ் மைனஸ் பண்ணி, ஈக்குவலா இருந்தா எதுவும் பண்ண வேண்டிய, கம்மியா இருந்தா எதுவும் பண்ண வேணா, ஏன்னா ஆட்டோமேட்டிக்கா என்ன ஆயிடும் அட்ஜஸ்ட் ஆயிடும். ரைட் சார்? That's it with regard to the revision of the amalgamation, my dear lovable students. Now you can try by your own the last 2 illustrations, sir, as your things, and you can get, because nothing more, nothing less to discuss. All the conceptual has been completed, my dear lovable students. That's it with regard to the. Sir, very, very, very happy evening to all. So we are doing amalgamation. Amalgamation, the objective is to deal with 2 people books. In the books of the Students Limited, we have to close the books of accounts and we have to open or continue the ANM Limited. Students is a 5-step approach. Dismantling the balance sheet, purchase consideration due, receipt of purchase consideration, settlement to the preference shareholders, close the realization account and settle the equity shareholders. That step is a 5-step approach. Step number 1, realize the assets not taken over, settle the liabilities not taken over, incur realization expenses, find out the profit or loss on settlement to the preference shareholders, and the last one, close the realization account and settle. I'm coming to illustration number 7. Very important and good, super fantastic illustration. K Limited and L Limited amalgamate to form new company called as LK Limited. Financial position of these 2 companies as on date of amalgamation was as under. So this is K Limited and this is L Limited. They have given share capital, okay fine, reserves and surplus, long-term borrowing, trade payable, total balance sheet. Assets PPE separately given, intangible asset given, inventory, trade receivable, cash and cash equivalent, total. Notes to accounts, share capital, equity share capital is also there and preference share capital is also there, total 12 lakhs and 6 lakh. Reserves and surplus, general reserve and P&L account, they have given. Long-term borrowing separately given and the total is 2 lakhs and 2 lakh. PPE, land and building, plant and machinery, furniture and fittings. Intangible only goodwill. Cash and bank, they have separately given. Terms of amalgamation are, that is, instead of one student, we are having two students. Student 1 and student 2. So ANM have to settle the PC, purchase consideration, to student 1 and purchase consideration to student 2. The terms of amalgamation are as under. The assumption of liabilities of both the company. That means ANM is going to take over the liabilities of both the companies. Right. Issue of 5 preference shares of rupees how much each? In LK Limited, that is ANM, at how much paid up? 18 paid up. At a premium of euro per share? 4 per share. For each preference share held in both the companies. For both the preference shareholders of Students Limited, ANM said that I will give 5 shares of rupees 20 each. That is 18 rupees paid up and 4 rupees securities premium. So totally 22 rupees issue price. In amalgamation, always we have to take the issue price, not the face value, not the premium. Are you really with me? Issue of 6 equity shares of rupees how much each? 20 each in LK at 18 paid up at a premium of how much per share? For each equity share held in both the company. In addition, necessary cash should be paid to equity shareholders. Necessary cash. What cash? Of both the companies, as is required to adjust the right of shareholder of both the company in accordance with the intrinsic value of shares of both the company. Intrinsic value means net asset. Intrinsic value means issue of such amount of fully paid 6% debentures in ANM Limited as is sufficient to discharge the 5% debenture in K Limited at a discount of 5% after taken over. So this is how ANM is going to settle to the equity, preference, debentures of the company, students, and they have not stopped. Still we are having B. Assets and liabilities are to be taken over at what value? Book value. Inventory and trade receivable for which provision at how much and how much percent to be raised? 2% and trade receivable of K Limited include 20,000 due from what limited? L Limited. The LK is to issue 15,000 new equity share of euro each. 18 paid up at a premium of 4 per share. So as to have sufficient what capital? Working capital. This is LK, ANM. Prepare ledger accounts in the books of K Limited and L Limited to close their books. That means we have to close the books. Be with me, participate, don't run for the answer. If you are running for the answer, process you will not understand. This is the maximum, sir, 10 to 14 mark question will be getting from a amalgamation chapter. Understand what is happening. There is a company called as ANM Limited. Sir, they are going to amalgamate with student 1 and student 2. They have to pay PC to student 1. They have to pay PC to student 2. This is what the one-line story. Comfortable? First, you have to check always, will the net payment method applicable or not? No. In this case, net payment method will not be applicable. Because they said that they are going to do based upon the intrinsic value method. Intrinsic value method means net asset method. Intrinsic value method means net asset method. Are you really with me? That means, my dear lovable students, which is nothing but assets taken over at agreed value minus liabilities taken over at agreed value. This is for student 1 and this is for student 2. Can you say what is the terms of amalgamation? This is the terms of amalgamation. So my dear lovable students, issue of 5 preference shares of how much each? 20 each. In what limited? LK Limited. At the rate of 18 paid up at a premium of 4 per share for each preference share held in both the companies. So this is the terms and condition for both. Here, issue of 6 equity shares of rupees 20 each at 18 paid up at a premium of 4 for each equity share held in both the company. In addition to the equity share, we will give what? Cash also. That's a problem. They have not mentioned how much cash. So it can't be net payment method. It should be net asset method. Comfortable? So my dear lovable students, issue of such amount of fully paid 6% debenture in where? LK. As is sufficient to discharge the 5% debenture in K Limited at a discount of 5% after takeover. Not now discount. It is after taken over. After taken over will be taken care by ANM, not by students. Comfortable? Assets and liabilities are to be taken over at book value. So go to the balance sheet and tell me one by one. What is the asset? First one, land and building. Have both person is having land and building? Yes, sir. So land and building value 4,50,000. So land and building 4,50,000. For the next person, 3 lakhs. I have taken the first one, right, sir? Then number 2, plant and machinery 6,20,000. 5 lakhs. Comfortable? Then next one, furniture and fittings. What is the value for furniture and 60,000, 20,000, right, sir? Yes, sir. What is the next one? Goodwill. I will be writing goodwill. What is the value of goodwill? 80,000 and dash. Comfortable? Then next one, inventories. Sir, inventory, is there any provision they want to create? Yes, sir. How much percent? 2% provision they want to create. Up a calculator. 2,25,000 into 98% will be the taken over value. Correct? Which comes to 2,20,000 and 1,40,000 into 98% comes to 1,37,200. Am I right with the inventory valuation? Yes, sir. Inventory done. Then number 4, trade receivable. Is there any provision for trade receivable at the rate of? So 2,75,000 into 97.5% comes to 2,68,125. Right, sir? And there 1,75,000 into 97.5% comes to 1,70,625. Can I proceed? For cash and cash equivalent, is there any discount given? No, sir. So cash and cash equivalent, right? Because they have not said in the question that they are not taking care cash and cash equivalent. So every asset has to be taken care. So what is the book value of the cash and cash equivalent? 1,61,375 and 72,175. Are you really with me? Is there any other asset we have to taken care? So assets taken over at agreed value will be 4,50,000 plus 6,20,000 plus 60,000 plus 80,000 plus 2,20,500 plus 2,68,125 plus 1,61,375 comes to 18,60,000. Can I proceed? There it is, 3 lakh plus 5 lakhs plus 20,000 plus 1,37,200 plus 1,70,625 plus 72,175 comes to is the assets taken over at agreed value less liabilities taken over at agreed value. One by one you say. First one, what payable? Long term borrowings. Sir, actually after taken over they are giving some discount. It is a headache of the ANM, not the headache of the students. Correct? So number 1, what is a long term borrowing? Debentures, 2 lakh. So long term borrowing, debentures. How much percent debenture? 5% debenture. For the first student it is 2 lakh and second one it is, sir, one more item is there. Secured loan. For the first student it is dash and for the second student 2 lakhs. Can I proceed? What is the second liability taken over? Trade payable. Is there any provision? No, sir. Trade payable amount 1 lakh. And for second one, 2 lakh 10,000. Is there any other liability? No, sir. So you will be getting liability taken over at agreed value. 2 lakh plus 1 lakh comes to and 4 lakh 10,000. Right? You will be getting net asset, which is nothing but 18 lakh 60,000 minus 3 lakhs comes to 15 lakh 60,000 is the net asset of the first student. Right? 12 lakhs minus 4 lakh 10,000 means 7 lakh 90,000 is the net asset of the second student. Now you read it. We have to read it multiple times, the question. Don't run behind the answer. The terms of amalgamation, it is like this. Everyone read along with me. Assumption of liability of both the companies. That means ANM is going to take over liability of both the company. Have we taken over liability? That's why assets taken over at agreed value minus liabilities taken over at issue of 5 preference shares of rupees 20 each in what limited? At rupees 18 paid up at an issue price of 4 per share for each preference share held in both the companies. That means, my dear lovable students, I know for the student number 1, total purchase consideration should be 15 lakh 60,000. Right? Total purchase consideration should be 15 lakh. Sir, out of this 15 lakh 60,000, I have to settle to the preference shareholders and also I have to settle to the equity shareholders. You go and check. In Students Limited 1, how many preference shares are there? 4,000. Sir, for every 1 share, they are going to issue 5 preference shares. Correct? So 4,000 preference shares into how many shares? Actually into 20, but 18 paid up at a premium of 4. So 18 plus 4, 22 is the issue price. Are you able to appreciate? That means 4,000 into 5 into 22 comes to 4,40,000 is the amount they are going to settle to the preference shareholders. Right? So out of 15 lakh 60,000, if they pay 4,40,000 to the preference shareholders, balance 11 lakh 22,000. 11 lakh 20,000 is what the total amount to be settled to the equity shareholders. Are you getting it? Out of this 11 lakh 20, some part they are going to settle as equity shares, some part they are going to settle as cash. Can I proceed? How much equity share? Issue of 6 equity shares of rupees 20 each in LK at 18 paid up at a premium of, so for that also issue price is 22, correct? For each equity share held in both the companies. That means how much equity share are held in student 1? So 8,000 equity share into 1 share divided by 1 share into 6 share into 22. Are you all really with me? That means, my dear lovable students, 8,000 divided by 1 into 6 into 22 comes to 10,56,000. That means out of 11,20,000, hello sir, 10,56,000 they are going to give it as, so 64,000 will be the cash component. Now you read it. In addition, what cash? This is the necessary cash. Why? Necessary cash should be paid to the what shareholder? Of both the company as is required to adjust the right of the what holder? Of both the company in accordance with the what value? So in order to meet up the intrinsic value, total shareholder should get 15,60,000. Correct? Because that is the what asset? Net asset. So total preference shareholder plus the equity shareholder should get a total of 15 lakh. Out of that, 4,40,000 they are getting as preference share. Sir, and 10 lakh 56 they are getting as equity. Balance 64 should be settled as clarity. So the total purchase consideration to the student 2 is 7,90,000. Can I proceed? This is also to the preference shareholders and also to the equity shareholders. My dear lovable students, to the what shareholder? Preference shareholder. Again the same point will be applicable. How many number of preference share in student 2? So 3000 preference shares into, for every one share, ANM will give 5 share at an issue price of, that means 3000 into 5, 15,000 into 22 comes to 3,30,000 is the amount of preference share to be issued by the ANM to the, that is out of 70,000 purchase consideration, 3,30,000 they are going to settle to the preference shareholders. So 7,90,000 minus 3,30,000 comes to 4,60,000 is the total amount paid to the equity shareholders. To the equity shareholders, they will settle equity share and also they will give cash because they said necessary cash. How much number of equity shares are there in students? 3. So 3,000 equity share divided by 1 into 6 share into issue price. So 3,000 divided by 1 into 6, 18,000 into 22 comes to, that means my dear lovable students, out of 4,60,000, 3,96,000 they are going to issue as shares. Am I right, sir? So 4,60,000 minus 3,96,000 comes to again 64,000 is the amount of cash. There is no condition that cash amount should be same. In this question, with God's grace, it is matching. Are you all really with me? Now you read it. Issue of 6 equity share of how much each? 20 each in LK. At how much paid up? At a premium of, for each equity share held in both the company. In addition, necessary cash should be paid to the equity shareholders of both the company, as is required to adjust the right of the shareholder of both the company in accordance with the intrinsic value of share of both the company. Comfortable? So in order to match the intrinsic value, what is matching intrinsic value? Net asset divided by number of shares is what intrinsic value. Correct? That means I have to issue total PC of 15,60,000. Some I am going to issue as preference share, some I am going to issue as equity shares. Clarity? So whatever short is coming to match this 15,60,000, I will settle by way of cash. And whatever short is coming to match this 7,90,000, I will settle by way of cash. That means I am ready with the purchase consideration. Comfortable? Now I can deal with the student 1. I am going to prepare the ledgers. Are you ready? That is, it is a how many step approach? Step number 1, dismantle the, for that I have to prepare the realization account. Can we look at the balance sheet of the student, my dear lovable students? Sir, I am going to dismantle, always I will dismantle the asset side of the balance sheet. Okay, wow. Go to PPE, man. PPE, sir, to what and what? Land and building. Everyone participate along with me. 4,50,000. Comfortable? To plant and machinery. How much? 6,20,000. Are you getting it? Then to furniture and fittings comes to 60,000. I have dismantled the PPE, right, sir? Then to goodwill, 80,000. Following. Then, sir, to cash at bank, will come, will not come? Will come, because there is no exception, correct? To cash at bank comes to 1,20,000. Are you really with me? The next one, to cash in hand, comes to 41,375. Are you all really with me? That's it. I have done with the cash and cash equivalent, goodwill and PPE. I'm now going to the balance sheet. Is PPE dismantled? Yes, sir. Intangible dismantled. Inventory and trade receivable? No, sir. So to inventory, how much? 2,25,000. Are you understanding what I'm doing? To trade receivable, 2,75,000. Comfortable? That means, my dear lovable students, cash and cash equivalent have you dismantled? That's it. I have completed the dismantling of the asset side of the balance sheet. Comfortable? Coming to the liability side, I am having trade payable. So I will be writing by what payable? How much lakh? 1 lakh. Then I am having long-term borrowing, which is what? 5% debentures. So by 5% debenture, how much lakh? Have the debenture taken over? Yes, sir. Yes, sir. Are you really with me? Then, sir, will I close the share capital and reserves and surplus to realization? No. I have to open two different accounts called as equity shareholders account. Are you all really with me? Sir, preference shareholders account. Clarity. Okay, man. In the equity shareholders account by equity share capital account comes to 8 lakh. In the preference shareholders account by preference share capital comes to 4 lakhs. Are you really with me? Reserves and surplus should go to the by general reserve 0. Nothing is there. Right? By P&L account 3,71,375. Are you able to appreciate? That's it. I have dismantled even the reserves and surplus also. That means done. I have done with the dismantling of the. Coming to the step number 2, purchase consideration due. Journal entries, ANM Limited account debit to realization. So new ledger will open called as ANM Limited. Are you all really with me? To realization account, I have to write in bracket, it will be PC, right? We already calculated what is the PC to the student number 1. Total 15,60,000. Are you able to appreciate? So I have to get 15,60,000 from ANM. That I will be crediting in the realization account as by ANM. That is, sir, PC 15,60,000. Can I get the PC? I am going to get as preference shares in ANM Limited. How and all? Preference shares in ANM Limited. Are you all really with me? Then equity shares in ANM Limited. Equity shares in ANM Limited. Appreciating, sir. And also cash account. And also what? Cash account. Comfortable? Equity shares, preference shares in ANM Limited. I will post it as to what limited? How much is the preference share capital I am going to get? 4,40,000. Are you picturizing? Sir, how much is the equity share capital I am going to get to ANM? What is the equity share capital I am going to get? 10,50,000. Are you getting it? So 10 lakh equity shares in ANM, 10,56,000. To cash, sir, in cash account to ANM, how much? 64,000. Clarity? My dear lovable students, in the ANM Limited by preference shares in ANM Limited, correct? By equity shares in ANM Limited, correct? B. Cash. How much is the preference shares in ANM? 4,00,000. Getting it? Equity shares in ANM. 10,56,000. By cash. 64,000. So total 15,60,000 and 15,60,000. Are you all really with me? ANM ledger has been closed. Step number 3 done. Done. Coming to step number 4. Settlement to the preference shareholders. Shall we settle the preference shareholders? to the preference shareholders, we have to give to preference shares in ANM Limited 4,40,000. Correct? We are having preference shares in what limited? By what shareholders? Preference shareholders 4 lakh, and that's it. That ledger of 4,40,000 comes to an dandanaka done. I'm coming to step number 5, which is how many step approach? Adil, step number 1, realize the asset not taken over. There is no such concept here. Settle the liabilities not taken over. There is no such concept. Skip the step. Step number 3, incur realization expense. There is no such concept. Step number 4, find out the profit or loss on settlement to the, you are having loss, correct? Because in place of 4 lakh, you have settled. So by what account? Realization account comes to, so here total will be 4,40,000. Here total will be 4 lakh, and in the realization account to preference shareholders 40,000 loss will be there, correct? Are you all really with me? That's it. Then the last step, close the what account? Realization account, and settle the, so 1 lakhs plus 2 lakhs plus 15 lakhs 60 means here it is coming 18 lakhs 60. Can I proceed? So 4 lakh 50 plus 6 lakh 20 plus 60,000 plus 80,000 plus 1 lakh 20 plus 41 375 plus 2 lakh 25 plus 2 lakh 75,000 plus 40,000 comes to, oh my god, here only Adhigam. So 19 lakh 11,375. Since the debit side is more than the what side? Credit side. It's a realization. So it should be by equity shareholders loss. Are you able to appreciate, sir? So here should also be 19 lakh 11,375. So 19 lakh 11,375 minus 1 lakh minus 2 lakh minus 15 lakh 60,000 means 51,375 is the what loss? Realization loss should be transferred to the debit side of the equity shareholder to realization account. Are you really with me? Which come to 51,375. Right? So 8 lakh is the equity share capital. 3 lakh 71,375 means 11 lakh 71,000 is the total amount company is liable to pay to the equity shareholder. Out of that, 51,375 balance still how much is payable? 11 lakh to equity shares in what limited? Have ANM gave an equity share? Yes, sir. How much is the equity share in ANM? 10 lakh 50. So can we give that 10 lakh 56? So in the equity shares in what limited? ANM Limited by equity shareholders account 10 lakh 50. So here also it become 10 lakh 56,000. Here also it become 10 lakh 56,000. Ledger has been. So out of, my dear lovable students, sir, 11 lakh 20,000 payable, we have settled 10 lakh 56,000. What is the balance? 64,000. Do you have cash? Take the 64,000, settle to the equity shareholders. So you have to write by equity shareholders 60. So I have given 64,000 and I have given 64,000. Comfortable? Cash account has been closed. I am settling the equity shareholders to what account? Cash account. How much? So 11 lakh 71,375 equity shareholder account also has been closed. Student number 1, all the ledgers we have closed. This is what the 5-step approach in the books of student number 1. Comfortable. You know one thing, I have completed only one student. I am having one more student. Hello, sir. Before moving to student number 2, just one question to you. Just one question to you. In question, is inventory there? For student number 1, what is the value of inventory? 2,25,000. Is debtors there? Yes, sir. What is the book value of debtor? 2 lakh 75,000. This is the data of the student number 1, right? My dear lovable students, into 2% and 2.5% is the undervaluation by ANM. Correct? So calculator, 2,25,000 into 2% comes to 4,000. 2,75,000 into 2.5% come to 6,000. So 6,875 plus 4,500 1,375 is the total undervaluation of student number 1 by the ANM. Because my asset, 100 rupees asset, he said that he will value only at 98. Sir, my 100 rupees asset, he said that he will be value only at 97.5. So 2 rupees loss, 2 rupees 50 paisa loss. Am I right? My total loss will be 11,375. And since my preference shareholders are little good to look, he said that instead of 4 lakh, I will be settle you at what? 40,000 rupees. 4,40,000 rupees, right? Because preference shareholders was little beautiful. So ANM said that instead of 4 lakh, you take how much? 4,40,000. That is also a loss to the equity shareholders. So plus 40,000 comes to 51,375. That's how 51,375 realization loss has been booked by ANM. Fantastic to the core. Suma valid game. Sir. Shall we take the pen for the student number 2? Yes, sir. It's a simple game of solving 5-step approach. This is for student number 2, which is again dismantling of balance sheet. Sir, purchase consideration due, receipt of purchase consideration, settlement to the preference shareholders, close the realization account, and settlement to the equity shareholders. Be with me. Don't write. Participate. Right. Sir, first one, realization account. Can we dismantle the balance sheet? Yes, sir. The same. Always I will dismantle the asset. Right, sir? Yes, sir. Sir, to land and building. To what? Land and building. Comes to 3 lakhs. Please help me with the figures. Sir, to plant and machinery comes to 5 lakhs. Comfortable? To furniture and fittings comes to 20,000. Are you really with me? That's it. I have dismantled the PPE of the student number 2. Can I proceed, sir? To goodwill. Is there anything? No. No need to write. To cash at bank. Can I write to cash and bank? How much? 55,000. To cash in hand comes to 17,170. So 17,175. Comfortable? That's it. I'm going back to the balance sheet. The face of the balance sheet. Done with PPE. No intangible. I have to write the inventory. Right? So to inventory comes to 1,40,000. Am I right, sir? Yes, sir. Sir, to trade receivable comes to 1,75,000. When I'm doing, you may have a doubt. Sir, they only said that less 2% or less 2.5%. Sir, at what value? Book value. Book value. Book value. Because student always bring the book. Are you really with me? Yes, sir. Sir, always, sir, already we have done with the cash and cash equivalent. So the happy news for the day is we have done with the dismantling of the asset side of the balance sheet, right? Coming to the liability side, by trade payable comes to 2,10,000. Are you really with me? Long-term borrowing you are having by secured loan comes to 2 lakhs. Sir, I can't dismantle the share capital and reserves and surplus to the realization account. I have to open the equity shareholders account. I have to open the preference shareholders account. Clarity. In the equity shareholders account by equity share capital account, right up, which comes to how much lakh? 3 lakh. By in preference shareholders account, I have to write by preference share capital account. How much? 3 lakhs. Are you really with me? That's it. I'm having general reserve. Should go to the equity shareholders. By what reserve? General reserve. 1 lakh. 1 lakh. 1 lakh. 1 lakh is the general reserve. By P&L account. Sir, by profit and by profit and loss account. I gone to preference shareholders. That's why. Nothing. 97,175. Are you all really with me? That's it, my dear lovable students. We have dismantled the, what is step number 2? Purchase consideration. The new baby should born. We have to draw the new account called as ANM Limited to realization account. In bracket, you have to put the PC. Correct? What is the PC? 7,90,000. Right? In the realization account by ANM Limited. In bracket, you have to put the PC. Comes to 7,90,000. Can we get the purchase consideration? Sir, equity shares in ANM Limited. New ledger will open. Preference shares in ANM Limited. New ledger will open. Cash account. New ledger will open. Right? Sir, 2ANM will be the posting. 2ANM will be the posting. 2ANM will be the posting. Appreciating. Tell me how much is the equity shares in ANM? There, sir. I will go once. You please note. Otherwise, I can't go this much. Okay. 7,90,000. Preference is 330, 396, 64. Right, sir? Okay, sir. What is the preference, man? No, what you got to 3,30,000. Right, sir? Equity 3,96,000. Cash 64,000. Can we kill ANM? Yes, sir. Sir, by equity shares in ANM Limited by preference shares in ANM Limited by cash. Correct? How much is equity shares in ANM? 3,96,000. Preference shares in ANM? 3,30,000. Cash. If you add here, you will get 7,90,000. Here also you will get 7,90,000. Get out. Are you all really with me? That's it. Can we settle the preference shareholders? To the preference shareholders, to preference shares in what limited? Which comes to 3,30,000. Coming to the preference shares in ANM Limited by what shareholders? Comes to 3,30,000. 3,30,000. 3,30,000. That's it with regard to preference shares in ANM Limited. Right, sir? Step number 5, 5-step approach. Realize the asset not taken over. Skip the step. Settle the liabilities not taken over. Skip the step. Incur realization expenses. Nothing is there. Number 4. Find out the profit or loss on preference shareholders. Yes, instead of 3 lakh, they have paid 3,30,000. So by realization account, in bracket, you have to put the loss of how much? So here it is 3,30,000. Here also it is 3,30,000. Comfortable? Now I have to go to the realization account. To preference share, in bracket I have to put it as loss. How much? Now I have to close the realization. Brilliantly, I will add the debit side first. Are you really with me? 3 lakh plus 5 lakh plus 20,000 plus 55,000 plus 17,175 plus 1,40,000 plus 1,75,000 plus 30,000 comes to 12,37,175. Here also 12,37,175. Comfortable? Minus 2,10,000 minus 2 lakh minus 7,90,000 comes to 37,175 is what by equity shareholders account. Comfortable? This is the loss on realization. Hello, sir. So to realization account, in bracket, you have to write what? 37,175. Comfortable. Sir, can I give the equity shares from ANM to equity shares in what limited? ANM Limited. How much, man? 3,96,000. 3,90,000. Okay, man. Can I give the cash available with me? How much, man? My dear lovable students, I am coming to equity shares in ANM. I given that to equity shareholder. How much? 3,90,000. So this ledger 3,96,000 and 3,96,000. This ledger comes to an, and this cash I have given to buy equity shareholders 60. So this is also 64,000 and this is also 64,000. This cash account comes to an That's it. Coming to the equity shareholders. My dear lovable students, 3 lakh, their money as equity share capital is with me. 1 lakh rupees general reserve is with me. 97,175 is P&L balance is with me. 4 lakh 97,100 and minus. In that 37,175 loss they have to bear. Correct? I got equity shares of 3 lakh 96,000 from ANM. Minus the balance is 64,000. That's it. Equity shareholders account also comes to an preference shares already closed. ANM already closed. All the remaining ledgers already closed. Hello. Is student 2 is having any inventory? What is the book value of the inventory? 1 lakh. What is the book value of debtor? 1 lakh 70. 40 into 2 percentage and 1 lakh 75 into 2.5 percentage. Correct? So 1 lakh 40,000 into 2 percentage comes to 2,000. 1 lakh 75,000 into 2.5% comes to 4,375 plus 2,800 comes to 7,000 plus preference shareholder instead of 3 you paid 3 lakh. So there is a loss of 30,000 plus 7,175 comes to 37,175 is a realization loss, my dear lovable students. That's it. I have closed both the students limited by following how many step approach? Are you all really with me? Now you read it. You will be able to appreciate or understand what they want, where I have taken. This is called as amalgamation. We have started the chapter amalgamation. Come on. The terms of amalgamation are as under. Assumption of liabilities of both the company. When you taken the assets taken over at agreed value minus liabilities taken over at agreed value, have you taken all the liability? Yes, sir. Issue of 5 preference shares of rupees 20 each in LK Limited at 18 rupees paid up and 4 rupees per share premium for each preference share held in both the companies. Have you given preference shares to both the company? Issue of 6 equity share of rupees 20 each in LK at 18 paid up at a premium of 4 per share for each equity share held in both the company. Have we given equity share in both the company? In addition, necessary cash should be paid to the equity shareholder of what the company. As is required to adjust the right of the shareholder of both the company in accordance with the intrinsic value of share. Intrinsic value means net asset method, which is assets taken over at agreed value minus liabilities taken over at agreed value. Are you really with me? Issue of such amount of fully paid 6% debenture in LK as is sufficient to discharge the 5% debenture in what? K. At a discount of how much percent? 5%. Yeppo. That's why I have not reduced the discount. That's why I have taken over at the book value. Because assets taken over at agreed value minus liabilities taken over at the timing of taking over, my dear lovable students, they are taking over at book value. After takeover, they are redeeming at discount. That is their ishtam. That is ANM ishtam. Correct? Assets and liabilities are to be taken over at book value. But inventory and trade receivable for which provision at 2 and 2.5% respectively to be raised. Clarity. Trade receivable of K Limited include 20,000 due from what limited? L Limited. Look at here. K have to pay to L. For that, what K has to do? Just close it. What L has to do? Just close it. But when come to ANM, now K and L become one company. Correct? After amalgamation, hello sir, one person is receivable, same person to the payable. So we have to eliminate the mutual owings. We have to eliminate the, that I will teach in the books of the ANM. Are you really with me? LK means what? ANM is to issue 15,000 new equity shares of 20 each. You issue, you don't issue. That is your ishtam. Rupees 18 paid up and 4. So as to have sufficient working capital, prepare ledger accounts in the books of K Limited and L Limited to close their books. My dear lovable students, sir, in this question, you tell me, question number 6. In that question number 7, my dear lovable students, for student number 1, what is the realization loss we got? 51,375, yeah? 51,375, yeah? For student number 1, we are checking the ICAI answer, man. For student number 1, 51,375. Yes, 51,375. Comfortable? They are settled. Then, sir, in the books of L Limited, second student, 37,175. For them also, for us also, 37,175. Done, done. Are you all really with me? Now that blank page will be available for you. You can fill that. You can do that. You can tally that. With that, question number 7, a super duper question comes to an. What you are supposed to do now is, yesterday we have done question number 5, yeah? Now we have done question number 7, the same question you have to redo once again. Then you will start getting grip in Students Limited. When I keep the pen, nowhere it is stopping. Why? It is because of practice. If you want like that, you have to practice. Are you all really with me? I am waiting to solve the next question, which is question number 7 or question number 8. Hello, sir. Quickly do one time both the question and come back to me. Yes, sir. Very, very, very happy morning to all. So today onwards, we are going to start a very brand new subject called as Advanced Accounting. A very important subject for your group number 1. As we all know that in your group number 1, you are having Advanced Accounting, you are having Law and you are having Tax. This Advanced Accounting is a 100-mark paper. My dear lovable students, this subject will be considered as the exit route for group number 1. I will tell you, you should have a target of scoring 70 plus in Advanced Accounting. If you score really 70 plus in Advanced Accounting, the probability of passing group number 1 is very high. Because law is a theory paper, I am not saying that you should not study law. It's not like that. But getting really a 70 plus in law is a challenging one. Getting really a 70 plus in tax is a challenging one. Because of the two subjects. Because you are having both GST and DT. Because whenever you are having two subjects combo, whether it is tax or FM and SM, one paper will be easy and other paper will be generally tough. For example, if DT is easy, IDT will be tough. That's what happened in the last attempt. If IDT is easy, generally DT will be tough. The same way in G2, if FM is easy, SM will be tough. And SM is easy, FM will be tough. So, with that logic, it's very easy and a safer paper to score an exemption in accounts. That to 70 plus should be the target. Sir, how we are going to discuss this subject? That's what first I am going to explain. As we all know that every subject has been classified into 5 parts. Sir, part A is what going to discuss now. In that first we are going to talk about Schedule 3 and cash flow statement. Read with AS3. We have selected certain AS, accounting standard, for our discussion in part number 1, which is AS1, AS4 and AS5. So, we are going to have a mix of topics, chapters and the accounting standards, which is Schedule 3 and cash flow statement we are going to talk as chapter. And AS1, 4 and 5 we are going to discuss from the accounting standard part. Once we complete this one, we can say that part A is done. So in that part A, Schedule 3, we can expect for 10 mark in exam. Cash flow statement minimum 5 mark to 7 mark in exam. So this area I can rank as 15 mark for exam. And surely this accounting standard, many people will avoid AS4 and AS5 because basically it's a theory part. From this you can expect 5 to 7 mark. So I can say that 20 mark is the expected area from part number 1, part number A. Comfortable? With this introduction, we will be starting Schedule 3. I will tell you, Schedule 3 means a format which has been prescribed by the Companies Act. If you are preparing the financial statement of a company, what Companies Act is saying that you have to prepare in the format which has been stipulated in Schedule 3. So, it is a filling a format basically. Nothing is there. Very less logic we have to talk in Schedule 3. It's a format based chapter. For example, format of the balance sheet. Already a predetermined format has been given by the Companies Act. Hello? For example, you have to write the name of the company and balance sheet as at what date? 31st March. Like that you have to write. Then you have to repeat as if you are studying a theory paper. And I will be dealing for the initial some number of hours only the theory part. Then we will slowly move into the problem. So we will be start discussing one by one. Basically, balance sheet classified into two categories. Number one, equity and liability. Number one is what? Respond along with me even though you are in virtuals. Equity and liability. Tell me. And number two, the second discussion is asset. Number two is what? So the first one is equity and liability. Equity and under equity and liability, you are having shareholders fund. You are having share application money pending allotment. You are having share application money. You are having non-current liability. You are having current liability. You are having, that's it. So everyone along with me take the notebook. Along with me take the notebook. Sir, we are going to write at least schedule 3 format for 5 to 10 times. Now we are going to write at least 5 to 10 times. Don't write very serious and all. Just write along with me. Sir, the balance sheet first of all classified into two categories. One is liability side and other is asset side. Right, sir? Liability side, number one, what? What is the first category? Classification. Equity and liabilities. Equity and liabilities. So basically, equity and liability is the name of the liability side. Equity and liabilities is the name of the liability side. Right, sir? The second side is the asset side. Second side is the asset side. Sir, this equity and liability, my dear lovable students, equity and liability can be classified into 4 categories. So the equity and liability can be classified into how many categories? 4. So picturize it. Not in the T format, we are having in the vertical format. First of all, 2 sides are there. Repeat along with me. What is the first side name? Equity and liability. What is second side? Asset side. Under equity and liability, you are having 4 major classification called as shareholders fund. Called as what? In the second one, my dear lovable students, share application money pending allotment. Share application money pending allotment. Share application money pending allotment. So what is the first one? Shareholders fund. Number 2, share application money pending allotment. Repeat once again. Shareholders fund. Number 2, share application money pending allotment. Don't hear. You have to say. Because in exam you have to write this format. Are you really with me? Number 1, shareholders fund. Number 2, share application money. Number 3 is non-current liabilities. Number 3 is what? Non-current liabilities. Number 4 is current liabilities. Number 4 is what? There is nothing we have to do. Already Companies Act prescribed a schedule, prescribed a format. We are going to learn what that format is all about and why an item is included in that format, included in a particular item. Why it has not been included in the particular item is what we are going to discuss. That's it. So this chapter is basically not a logical chapter. This is a format chapter. I just want to start the proceedings with a format. Then we will move into much logic. Just be with me. We are going to prepare the balance sheet. Balance sheet, how many sides? 2 sides. Sir, 1, equity and liabilities. Number 2, assets. Equity and liability classified into 4 categories. Number 1, shareholders fund. Share application money pending allotment. Non-current liabilities and current liabilities. Comfortable? Now we are going to add the subchart for each and everything. Sir, shareholders fund again classified into 3 categories. One is share capital, reserves and surplus, money received against share warrant. So, below that you have to put a chart that shareholders fund classified into three category. Shareholders fund classified into three category. Number one, share capital. Number one, share capital. Comfortable? The second one is the reserves and surplus. Second one is reserves and surplus. Third one, money received against share warrant. 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 So, under the shareholders fund, three things you have to, sir, disclose. Number one, share capital, reserves and surplus, money received against share warrant. Sir, what is this, sir? I will explain one by one. Don't worry at all. I will show you. For the share capital itself, I am having this much big explanation. Look at here. Under the share capital, you have to disclose 12 items. Are you really with me? So that we will be discussing in detail. First, we are setting the frame. Fine. So you be with me. Sir, schedule 3. Classified into how many category? 2 category. Number 1, equity and liability assets. Equity and liability classified into 4 category. Number 1, shareholders fund, share application money pending allotment, non-current liabilities, current liabilities. Sir, are you asking us to repeat and by heart this? Why not? Yes, because this is a format. This is a format based chapter. Are you really with me? Yes, sir. Sir, I will never ask you to by heart a journal entry because that is logic. But this is not logic. This is a format. Tomorrow, if company start changing the format, we also have to change the format. Right, sir? So, shareholders fund is the first main heading. Inside that, you have to show share capital, reserves and surplus, money received against share warrant. Repeat once again. Share capital, reserves and surplus, money received against share warrant. Are you really with me? So that's the main category, my dear lovable students. Then share application money pending allotment. Share application money. Below that, we don't have any classification for the share application money pending allotment. That means shareholders fund classified into how many category? 3 category. Number 1, share capital. Number 2, reserves and surplus. Number 3, money received against share warrant. Are you really with me? Fine, man. Below that, there is no further classification. I am coming to the what current liability. Under non-current liability, you will be having long-term borrowing. You will be having, wait, you will be having long-term borrowing. You will be having deferred tax liabilities. You will be having other long-term liabilities. You will be having, and you will be having long-term provisions. And you will be having. So, the liability classified into 2 categories. One is non-current liability and non-current liability means long-term liability basically. Current liability means short-term liability basically. Are you really with me? If any liability which will take time for repayment more than 1 year is a long-term liability, such liability are called as non-current liability. Are you really with me? Any liability which you have to pay within a short span of 12 months, within a period of how much month? 12 months. Such a liability is called as current liabilities. Such a liability is called as. So the next chart, man, non-current liability classified into 4 category. Non-current liability classified into 4 category. Number 1 is long-term borrowings. Number 1 is what? Long-term borrowings. Number 2 is deferred tax liability. Deferred tax liability net. Because you may have deferred tax asset and deferred tax liability, you will knock off that as per AS 22. Are you really with me? We will be discussing AS 22 at the appropriate time. And if the ultimate answer is deferred tax liability, you have to show it under non-current liability. Because there will be timing difference. There will be what difference? For more than 1 year. For more than. Any liability which you are having a life of more than 1 year is not a current liability. It is a non-current liability. That is why I am showing under non-current liability. First one, what borrowing? Long-term borrowing. Number 2 is what? Deferred tax liability. You have to write net. Deferred tax liability net. Then other long-term liability, other long-term liabilities, other long-term liabilities and long-term provisions, and you will be creating long-term. As per AS 29, you will create the provisions. As per AS 29, you will create the provisions. That provision, if that provision is a long-term provision, that you have to show it under non-current liabilities. Comfortable? Schedule 3, break it. Schedule 3, man. Format of Schedule 3. Schedule 3 classified into two category. Number 1, equity and liabilities and assets. Equity and liability classified into 4 category. Number 1, shareholders fund, share application money pending allotment, non-current liabilities and current liabilities. Right, sir? Sir, shareholders fund are 3 things are there. Number 1, share capital, reserves and surplus, money received against share warrant. Money received again. Fantastic to the code. The next one is share application money pending allotment. Then non-current liability and okay, man. Shareholders fund classified into 3 category. Number 1, share capital, reserves and surplus, money received against share warrant. Are you really with me? Then the second is share application money pending allotment. We don't have any further classification. Next one, what current liability? Non-current liability means basically long-term liability, right? First one, what borrowing? Long-term borrowing, deferred tax liabilities net, other long-term liabilities and long-term provisions. And long-term? Sir, the next one is what liability? Current liability. In that current liability, don't write. Just listen to me. First one, what borrowing? Here it is long-term borrowing. The opposite of long-term borrowing is short-term borrowing. Are you really with me? Then, sir, you will never have deferred tax liability because deferred tax liability timing difference will be more than 1 year. If it is more than 1 year, it should be what liability? Non-current liability. It can never be current liabilities. Correct? Then, my dear lovable students, sir, deferred tax liability will not come. Sir, then you are having specific current liability such as trade payable. Such as what? Even for that trade payable, you have to say or show the classification as subpart. That is total outstanding due of micro enterprise and small enterprises. Micro enterprise and total outstanding due of creditors other than micro enterprise and small enterprise. That is out of your total trade payable, how much amount you are liable to pay to the micro and small enterprises. How much you are liable to pay to the other than micro and small enterprises. Comfortable? So the first one, short-term borrowings. Number 2, trade payable. You are having 2 classification. Total outstanding due to micro enterprise and small enterprises. Total outstanding dues of the creditors other than micro and small enterprises. Micro and small enterprises is enough. Hello, sir. Then here if you see, first one you are having long-term borrowing. The opposite of long-term borrowing, short-term borrowing. Are you really with me? Yes, sir. Who will not come? Deferred tax liability will not come. For that replacement only what payable? Trade payable. Next one, other what liability? The counter is other current liabilities. Other current liabilities. Getting it, sir? Sir, here what term provision? Long-term provision. Opposite? Short-term provision. Getting it? So, other long-term liability. Opposite? Other short-term. Other current liabilities. Other what liability? We will not call it as short-term. Other current liabilities. Hello, sir. So, we are having new thing, man. Current liability classified into how many categories? 4 categories. Number 1, short-term borrowing, trade payables, further classified into 2 categories, which is outstanding to small and micro enterprises, other than small and micro enterprises, other current liabilities, and short-term provisions. Shall we put a graph? Put a current liabilities classified into 4 categories. Current liabilities classified into 4 categories. Number 1. First one, without seeing, can you add? Tell me. Short-term borrowings. Short-term borrowings. The next one, trade payables. Short-term borrowing, then trade payables. The next one, other current liabilities. Other current liabilities. Then last one, short-term provisions. Short-term provisions. Short-term provisions. Are you all really with me? This is a format of the Schedule 3 balance sheet we are talking about. Inside every item, what and all will come, that will be having a proper discussion. Don't worry at all. So look at me and with your chart, repeat along with me. Balance sheet classified into how many categories? 2 categories. Equity and liabilities and asset. Tell me, repeat once again. Equity and liabilities and asset. Equity and liability again classified into 4 categories. Shareholders fund, share application money pending allotment, non-current liabilities, current liabilities. Are you really with me? Shareholders fund again classified into share capital, reserves and surplus, money received against share warrant. Share application money pending allotment, there is no further classification. Non-current liability means generally long-term liability. Hence, long-term borrowing, deferred tax liability net, other long-term liabilities, long-term provisions. Comfortable? With regard to current liability, my dear lovable students, you are having short-term borrowings, trade payables. The trade payables again classified into 2 categories. There itself you can classify. Trade payables again classified into 2 categories. Number 1, outstanding to small and micro enterprises. That is, out of your total trade payable, how much is the amount payable to small and micro enterprises? And the next one, outstanding to other than small and micro enterprises. Other than, sir, small and micro enterprises. Comfortable, sir? So outstanding to small and micro enterprises, outstanding to other than small and micro enterprises. Then you are having other current liability and you are having short-term provisions. Getting it? Yes, sir. Once again, sir, have the full flow. Everyone join along with me. Sir, balance sheet classified in how many categories? Equity and liability, assets. Equity and liability classified into 4 categories. Shareholders fund, share application money pending allotment, non-current liabilities, current liabilities. Right, sir? Shareholders fund A, B, C. First one A. Share capital, reserves and surplus, money received against share warrant. Right, sir? Number 2, sir. Share application money pending allotment. There is no further classification. Hello, sir. Next one. What current liability? Which are non-current liability means long-term liabilities. Long-term liabilities. That is why it is starting with the long-term borrowing, deferred tax liability net, other long-term liabilities and long-term provisions. Comfortable? Current liabilities means short-term liabilities. Short-term liabilities. That is why it is starting with the short-term borrowings, trade payables, which are outstanding to small and micro enterprises, trade payables, which are outstanding to other than small and micro enterprises. Right, sir? Then you are having other current liabilities and short-term provisions. Comfortable? We are having one more side called as asset side. Don't write anything. We'll see the what they are saying. Sir, asset side. That asset mainly non-current asset. Asset is mainly, and you are having current asset. And you are having what? Under non-current asset, my dear lovable students, the first one, A is PPE, property, plant and equipment. A is what? Property, plant and equipment. Tell me. Intangible asset. Capital work in progress. Intangible asset under development. So, under the non-current asset, my dear lovable students, sir, you are having main subclassification of A. Under A, you are having 4 sub-classification. Are you really with me? So, what are the first 4 items? Property, plant and equipment, intangibles, capital work in progress, intangible asset under development. Sir, how the flow? Sir, your asset may be either fixed asset or tangible asset or intangible asset. Right, sir? Tangible assets are represented by the PPE. Are you really with me? Intangible assets are represented by intangible asset itself. Sometimes tangible assets such as factory, plant and machinery may be under construction. Correct? Such are called as capital WIP. Such are called as capital. So this is for whom? PPE. A PPE which is not ready is called as capital WIP. Are you really with me? So I have taken care of this. Who's the next one? Intangible. That's why intangible asset under development. Are you really with me? So first tangible, then intangible, then tangible under construction, then intangible under construction. Flow easy. So what are the item ready? 1, 2, 3 short. Property, plant and equipment, intangible asset, capital work in progress, intangible asset under development. Repeat once again. Property, plant and equipment, intangible asset, capital work in progress, intangible asset under development. Repeat once again. Property, plant and equipment, intangible asset, capital work in progress, intangible asset under development. Then you are having, sir, B, C, D, E. So totally 5 items are there. Totally under the first item you are having 4 items are there. Are you really with me? So assets classified into how many category? 2 category mainly. Number 1, non-current assets and the current assets. Are you really with me? Mainly non-current asset and the current asset. Comfortable, sir? Sir, with regard to non-current asset, totally you are having how many items? 5 items are there in the non-current asset. Are you really with me? That we can have a separate chart. Sir, non-current asset classified into 5 category. Are you really with me? Classified into 5 category. In that, item number 1, what they are calling as A. Item A. But item A is having 4 classifications. Number 1, property, plant and equipment, intangible asset, capital WIP, intangible asset under development. Intangible asset under development. That means it has crossed the research phase as per AS 26. We'll be talking about that at the appropriate time. Are you really with me? This is what your item A. Then coming to item B. Have you done with item A? Right, sir. First one, property, plant and equipment. Number 2 is intangible asset. Number 3 is capital WIP. Number 4 is intangible asset under development. Property, plant and equipment, intangible asset, capital WIP, intangible asset under development. Intangible asset under development. Right, sir? Yes, sir. The B part is non-current investment. What, man? So the second part is non-current investment. B part is non-current investment. The C part, with regard to non-current asset, deferred tax asset net. Deferred tax asset net. We heard somewhere counter name. Deferred tax liability net. Where? Under the dash current liability. Non-current liabilities. Paka? My dear lovable students, the next one, man. So the D part is the long-term loans and advances. Long-term loans and advances. Long-term loans and advances. And the E part is the other non-current asset. Other non-current asset. Other non-current asset. Other non-current asset. So my dear lovable students, your asset side can be classified into 2 categories. Non-current assets and current asset. Non-current asset again classified into 5 categories. Item A, B, C, D, E. Under item A you can have 4 clauses. Clause 1, clause 2, clause 3, clause 4. Clause 1, PPE. Clause 2, intangible. Clause 3, capital WIP. Clause 4, intangible asset under development. Intangible asset under development. Comfortable? With regard to B part, what current investment? Non-current investment. With regard to C part, deferred tax asset net. D part, long-term loans and advances. Long-term loans and advances. And E part, other non-current asset. Other. So repeat along with me, sir. Balance sheet asset side classified in how many category? 2 category. Number 1, non-current asset, current asset. Non-current asset again classified into 5 category. Item A, B, C, D, E. Item A classified into 4 sub item. Number 1, PPE, intangible asset, capital WIP, capital WIP, intangible asset under development. Right, sir? Second one, non-current investments. Non-current investment. Next one, deferred tax asset net. Deferred tax asset net. Next one, long-term loans and advances. Long-term loans and advances. Next one, other non-current assets. Sir, everyone have to repeat. Number 1, item 1. Item 1. Path repeat. You see, just see and say. Item A. How many item? 4 sub item. Number 1, property, plant and equipment, intangible asset, capital WIP, intangible asset under construction. Now I will say the item, you have to say the name. Item B, non-current investment. Item C, deferred tax asset net. Item D, long-term loans and advances. Item E, other non-current, better but not happy. Again, once again. Item A, how many sub item? 4 sub item. Everyone participate. Number 1, PPE, intangible asset, capital WIP, intangible asset under development. Right, sir? Now I will say the item, you have to say the name. Item B, non-current investment. Item C, deferred tax asset net. Item D, long-term loans and advances. Item E, other non-current assets. Last time, be along with me. Sir, shall we come from the first? We are talking about the format of Schedule 3. Schedule 3 balance sheet classified into how many category? 2 category, equity and liabilities and assets. Right, sir? Equity and liability, sir, balance sheet order liability side classified into 4 category. Right, sir? Shareholders fund, share application money pending allotment, non-current liabilities, current liabilities. Are you really with me? With regard to shareholders fund, we are again classified into share capital, reserves and surplus, money received against share warrants. Comfortable? Sir, share application money pending allotment does not have any further classification. Non-current liability, we are having 4 further classification. Generally, non-current liability means long term. That's why we are having long-term borrowings, deferred tax liabilities net, other long-term liabilities, long-term provisions. Are you really with me? And current liabilities again classified into 4 category. Number 1, short-term borrowings, trade payables who are outstanding to small and micro enterprises. Sir, outstanding to other than small and micro enterprises, other current liabilities and short-term provisions. That's it. That's it with regard to the liabilities. Coming to the classified into 2 categories. So liability side you are having 4 category. Asset side you are having, that means half of liability only assets is there. Liability you are having mainly 4 classification. Number 1, shareholders fund, share application money pending allotment, non-current liabilities, current liabilities. Comfortable? Whereas under the asset side, you are having non-current assets and current assets. Under non-current asset, you are having 5 subdivisions. Item A, B, C, D, E. Item A, PPE, intangible asset, capital work in progress, intangible asset under development. Comfortable? Item B, non-current investments. Item C, deferred tax asset net. Item D, long-term loans and advances. Item E. Right, man. Coming to the next one, man. The last slot basically, what asset? Current asset. You are having what asset? Under current asset, 1, 2, 3, 4, 5, 6. 6. Current asset classified into 6 categories. So you can put the chart. Current asset classified into 6 category. Current asset classified into 6 category. These are the current asset item. Number 1, current investment. Number 1 is current investment. Number 1 is current investment. Sir, current investment. Right, sir? The next one is inventories. Clause B is inventories. Clause B is inventories. The next one, trade receivables. Next one, trade receivables. Trade receivables. Next one, cash and cash equivalent. Cash and cash equivalent. Next one, short-term loans and advances. Short-term loans and advances. Short-term loans and advances. Last one, other current asset. 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 Comfortable, sir? 6 items, sir. What are 6 items under current asset? Tell me. Current investment, inventories, trade receivable, cash and cash equivalent, short-term loans and advances, other current assets. Sir, what schedule 3 is saying that? Just listen, man. You are having current asset. You are having other than current asset. Correct, sir? The first category is non-current asset. What asset? Non-current asset, which is classified into 5 category. Sir, basically non-current asset means, is it fixed or current? Fixed. So the first fixed item is PPE. The another fixed item is intangible asset. Some fixed assets may be under construction. Some intangible asset may be under development. Comfortable? This is what you are trying to list in the clause A. Whereas clause B is what? Current investment. Non-current investment. Non-current investment. Sir, deferred tax asset. Deferred tax asset net. Then long-term loans and advances. Long-term loans and other non-current assets. Other non-current. So basically what schedule 3 is trying to say is, sir, you are having non-current asset. You are having non-current asset means nature is what? Long-term. Long-term. So you will be making investment in your own business, such as PPE, such as intangible asset, or PPE under construction, or intangible asset under development. This is the NSR. First option you are having. Are you really with me? That means concentrate in your own business. After you concentrate in your own business, you are still having money. That means you are having sufficient PPE, you are having sufficient intangible asset, you are having PPE under construction, you are having intangible asset under development, but still you are having what with you? Money with you. You invest somewhere called as non-current investment. You invest somewhere, some other business. So what they will do now, they will borrow money from you and they will start creating their PPE. Are you really with me? For them, it will be a long-term borrowing. For them, it may be a short-term borrowing. So first, you are having money with you. What you are supposed to do? Create your own empire by way of PPE, intangible asset, PPE under construction, that is capital WIP, intangible under. Sir, still I am having money, sir. Hey, help others, man. You invest in the what current investment? Non-current investment. You invest in the, sir, because of doing business, you may have tax consequences. That means timing difference will come, which is deferred tax asset and deferred tax liability, which will not set off within 1 year. It will take more than 1 year. That is called as deferred tax asset net. Deferred tax asset. Are you really with me? Yes, sir. Sir, then long term what and what? You can give, sir, to others long term loans and advances. Long term loans and the balance miscellaneous other non-current asset. So what schedule 3 is literally saying to us is, first to try to focus on your business. How you will focus on your business? You construct PPE, you construct intangible, capital WIP. I have focused, sir, in my business. Still I am having money. Help others by way of non-current investment. You invest in the others business, which is called as what? Current investment. It is not a short investment, it is a long-term investment. Hello, sir. Try to help the government, man. Sir, instead of paying less tax now, initially pay more tax and in future pay the less tax. Are you really with me? It's like you are investing with the government by way of deferred tax asset. Deferred tax. For example, actually I am liable to pay only 1 lakh rupees tax in the first year. Hello, sir. Because of certain circumstances in year number 1, I am paying 10 lakh. So I paid certain advance tax. Are you really with me? Then in future, I will be paying more tax or less tax? Less tax. So it's an asset to you. It's like a prepaid expenses. Because you are having lot of money. First you focused on you. Then you focused on other. Then government is saying that who will focus on us? Please focus on us also. That is deferred tax asset. Hello, sir. Still money is there. Still money is there. Sir, don't give it as non-current investment. Give it as long-term what and what? Loans and advances. Still money is there in my business. Sir, see the balance. Other non-current asset. Other. So how you are going to utilize the money? You are having lot of money. First, sir, focus on your business. How? Number one, property. Develop property, plant and equipment. Develop intangible asset. Capital WIP. Intangible asset under development. Are you really with me? Yes, sir. Yes, sir. Yes, sir. Now, still you are having money. Invest in the non-current investment. Are you really with me? Still you are having money. Sir, invest with the government called as deferred tax asset. Still you are having money. Long-term loans and advances. Are you really with me? Still you are having money. Put it on dustbin somewhere. Other non-current assets. Hello, sir. Sir, how, sir, this money will come? In order to get this money, I have to do the business. I have to do the. I will be doing the business by using the what asset, man? Current asset. Are you really with me? So what I will be doing, no? First, I will be making current investment. First, I will be making. Because if I make current investment, I will be getting monthly some return. My position is safe. Is my intention to start a business is to make kuti investments or to do the business? Do the business, man. Sir, buy the inventory. Buy the. Sir, when you buy the inventory, for what purpose you purchase the inventory? Sir, for puja. No, sir. For the purpose of sale. Sir, once you sell, what you will get? Trade receivable. Because the inventory will become debtor. Are you really with me? Then debtor will give you what? You will get cash and cash equivalent. Are you really with me? Now you are having what with you? Hey, help others, man. We give the short-term loans and advances. Still you are having cash, sir. Do the other current assets. Are you really with me? So, balance sheet, asset side, classified into how many category? Now you try to recall, classified into how many category? Two category. Non-current asset, current asset. Non-current asset means, sir, current or fixed? Fixed. So, try to develop your business, man. Number one, PPE, intangible asset, capital work in progress, and intangible asset under development. Comfortable. Still you are having lot of money. Try to invest somewhere. Non-current investment. Still you are having money. Deferred tax asset net. Still you are having money. Long-term loans and advances. Still you are having money. Other non-current asset. Comfortable. Sir, how to create the money, sir? You have to do the business. In order to do the business, you need the current asset. Are you really with me? Sir, to have the current asset, sir, if you are having money, first safeguard yourself. Number one, do certain current investment. Sir, have you started business for current investment? No. Sir, buy the inventory, convert it into trade receivable, get cash and cash equivalent from them. And if you are having money, provide short-term loans and advances. Still, if you are having money, are you all really with me? Comfortable, sir? Sir, my dear lovable students, yes, sir. Yes, sir. What you are supposed to do now is, you should try to write a mind map. This is beyond class, okay? You have to write along with me. No. We will be writing together. Don't write anything now, okay? Wait. Don't write anything now. Don't write. Balance sheet classified into, sir, two categories. This is schedule 3.3. Number one, equity and liability assets. Are you all really with me? Equity and liability again classified into four categories. So liability side basically classified into four categories. And asset side basically classified into two categories. Right, sir? What is the first one, equity and liability? Shareholders fund. Share application money pending allotment. What is the third one? Non-current liabilities, current liabilities. Comfortable? Here you are having non-current assets and current assets. Right, sir? Sir, shareholders fund, bulletin below, number one, share capital, reserves and surplus, money received against share warrant. Right, sir? Share application money, pending allotment. There is no further classification. Pakka, sir? You are having what current liability? You are having 4 subclassification. Correct, sir? What do you mean by non-current liability? Long. So long-term borrowings, then deferred tax liability net, other long-term borrowings, long-term provisions. Long-term? Sir, because liability is over, then you have to write the provision. Liability is over, man. Then that's why here it is what borrowing? Long-term borrowing. Long-term borrowing. You borrowed even from government also. You borrowed even from the government also. That's what deferred tax what? Liabilities. That means you paid less tax at the start. You have to pay more tax in future. So it is like you have borrowed from whom? Government. Are you getting it? Sir, we are going to close the liability, man, by way of other long-term borrowings. That's it, seal. So now, who done? What done? Liability, sir, you are having here other long-term what? Liabilities. Done. Close it. Now I am coming to the second category called as provision. What provision? Long-term provision. So this will be, sir, long-term provision. Are you really with me? So first all liability, then provisions. First one, long-term borrowing, deferred tax liability net, other long-term borrowing, take rest, then long-term provision. With regard to what liability? Current liability. Opposite of this. Instead of long-term borrowing, short-term borrowing, trade payables, other current liabilities, short-term provision. Sir, again here short-term provision. Because here other current liability. We closed the list, man. That's why other current liabilities. Comfortable? And trade payables are due to outstanding means due to small and medium enterprises other than small and medium enterprises. Getting it? With regard to non-current asset, man, which has been classified into 5 category. The number 1, PPE, intangible asset, capital work in progress, intangible asset under development. You are having still money. Non-current invest somewhere. What? Don't give loan. Invest somewhere. What? Invest somewhere. Still you are having money. Deferred tax asset net. Still you are having money. Long-term loans and advances. Long-term loans and still you are having money. Other non-current asset. Comfortable? Sir, how, sir, I will be having this much of money? Do the business. First secure your business by doing what investment? Current investment, because this is current asset. Current asset. Sir, have you started business for doing current investment? Current investment, okay, kuti investment for day-to-day affairs. But coming to the main business, have inventory. Convert the inventory into trade receivable. Convert the trade receivable into cash and cash equivalent. If you are having cash and cash equivalent, help others. Short-term loans and still if you are having money, other current assets. Are you all getting it? This is the prima facie primary format of the schedule 3, my dear lovable students. Shall we quickly go through this format once again? This format, before you listen to lecture number 2 of schedule 3, my dear lovable students, you have to write these charts 3 times. How many times? This chart. Then lifelong your schedule 3 settled. Otherwise, you will scratch your head here and there. What will come there? What will not come there? What will come there? And I will tell you, man, one question, sir, they will be giving with a lot of item, which is trading account and what? P&L account. Once you read the question itself, you have to mark that where those items has to be come. And I will be explaining inside long-term provision. Is there any item for long-term provision? Is there any item for long-term provisions? In balance sheet, is there any item called as long-term provision? You have to shoot up whether it is in the liability side, asset side. Liability side. Liability side classified in how many category? For is it there under share capital? Shareholders one? No. Sir, next one. Share application money pending allotment? No. Then non-current liabilities. Picturize it. Under non-current liability, how many items are there? 4 items. Number 1. Long-term borrowings. This is not long-term borrowing. This is provision. Provision is at the end. Provision is at the end. Correct? What and all will be shown. The amount shall be classified as that provision. You should say provision for employee benefits. Provision for, in that, how much provision I have created for what benefit? Employee benefit. And others specify the nature. That is, how much provision I created for the employee benefits, how much is the provision for the others. Like that, you should have a further classification. This you will be getting in the further explanation. So when I say long-term provision, your mind should say that, okay, it is in the liability side of the balance sheet. It is not there in the first two item. It is there in the third item. Third item, fourth item, only sir is talking. Hello, sir. Such a navigation, if you want, you have to, sir, write 3 times the chart. Are you really with me? Then we will be talking about, after each and every item we discussed, we will be talking about what is the format of the P&L account as per schedule 3, because this is just the format of the balance sheet. We are having statement of profit or loss. Are you really with me? In that statement of profit or loss, we are having item number 1, 2, 3, 4. Under item number 4, this many items are there. Then we are having 5, 6, 7, sir, 8, 9, 10, 11, 12. Very good, sir. 13, 14, 15. And we are having 16 sub-items are there in the P&L account. Fantastic. You should say all the 16 items. Sir, if a question come in exam, we are supposed to write the format. Fine. Balance sheet anyway, amalgamation question will be there. Consolidated finance statement question will be there. Anyway, we will not get the right answer for those questions. We can borrow that format. No problem. But P&L, you will never have a question. This how many line item? 16 line item should be there with you. Then only you will be able to write. And when a question come in exam, first you have to write the format. Then you have to start filling the items to that. Hello, sir. So, if you don't have a grip of what is there in the format, you will not be able to appreciate. For example, I will tell you, man, like this only one question will be coming in exam. That is what we are going to do in the coming classes after completing the P&L, because one question will be having from both trading balance sheet and the P&L. For example, following is a trial balance of Omega. One trial balance will be given. Land at cost, where the land should come. PPE. So here itself you have to write it as PPE. Understanding? So initially itself you have to write plant and machinery at cost, where? PPE. So PPE, where it will come? Non-current asset. How many items are there? 4 items are there. Number 1, PPE, intangible asset, capital work in progress. Okay, man. Trade receivable, current asset. Under current asset, what category? Trade receivable category only, because the main heading itself is trade receivable. Are you ready with me? Inventories, they have given current asset. If it is closing inventory, generally inside the trial balance only opening stock will be available. Hello, sir. So I have to check whether it is a opening stock or closing stock. We will be doing bank balance, cash and cash equivalent. They have given what purchases, adjusted purchase. That means the stock is a closing stock. I will explain at the appropriate time what is adjusted purchases, what is opening stock, what is cost of goods sold. Don't worry. Don't stare at me. I will explain. Don't worry. Factory expenses. This should go to balance sheet. Which side? Takkun say. P&L account. Thank you, sir. P&L account. So out of how many line item? 16 line item. We should know where to place this factory expenses. Are you all really with me? So, sir, administration expense surely P&L, selling P&L, debenture interest P&L, interim dividend paid P&L, equity capital, share capital. You should say that equity and liability, shareholders fund, share capital. Mind should do like that. Then only speed will increase. 10% debenture. Long-term borrowings. Sir, you are having general reserve, reserves and surplus, P&L account, reserves and surplus, security premium, reserves and surplus, sales, P&L account, trade payable, current liabilities. Under current liability, you are having how many item? Under current liability, you are having how many item? 4 item. Item number 1, short-term borrowings, trade payables, other current liabilities, short-term provisions. So we are having a specific head of trade payable. There itself we will write inside this MSME. Sir, other than MSME has not been given in the question. So we will not write that much detail. Hello, sir. provision for depreciation should be reduced from the fixed asset. Should be reduced from the asset. Respective asset will be there, no. Reduce the provision for depreciation. Suspense account, sir, they have given in the credit side. So, trial balance has not been tallied. So, we will be park the suspense account in liability side. Sir, where, sir? Under share capital? No, sir. So, somewhere we have to park it. That only we will be discussing in the further discussion. Are you all really with me? This I don't know, sir. That this you don't know, sir. Now you don't know, sir. Don't worry, sir. You will be having additional information. Authorized share capital of the company is how much share? 40,000 shares. Of each? This you have to show in the under which head? Equity, okay. Under which head? Shareholders fund. Company on the advice of the independent valuer, which should revalue the land at what? 3,60,000. So they are going to revalue the PP. So revaluation surplus will come. Increase the value of the asset and show it as revaluation surplus, or decrease the value of the asset and show it as debited to the P&L account. Are you all really with me? Declare final dividend at the rate of 10%. They want to issue dividend declared. If dividend has been declared, it will be a liability for the company. Whether it has to be shown it as current liability or not is a discussion. Are you all really with me? Suspense account of 4,000 represent. They are saying to deal with how the suspense account has to be dealt. Depreciation is to be provided on plant and machinery at how much percentage? You are required to prepare Omega Limited's what sheet? Asset 31.3 and statement of P&L with what's to accounts, notes to accounts for the year ended 31.3 as per schedule 3. Ignore previous year's figures and taxation, and in any question they won't give the last year figure, because to write the current year figure itself we don't have time in examination. Then from where we will write the previous year figure? Hello sir. Why I read this question is, you look at from this question how you will be able to write a balance sheet if you don't know the format. You can take the format from the other questions of the question paper. There is no doubt. But I will tell you, a student who are doing that will write the figures of that question only. Because he will be seeing the format writing, seeing the format writing, seeing the format writing. You will be taking triple the time of what is expected to be completed for this question. Are you understanding? Don't do that much smart and all to pass CA examination. If you are that much smart, spend your half an hour time to write 3 times what is the format. You itself will feel a where level confidence in schedule 3. Are you all really with me? We are having how many sub items of P&L? 16. That we have not discussed. I am not going to solve this question. I am just saying that this is the relevance of studying the schedule 3, and don't worry at all. That format will be there in your hand. Sir, quickly shall we recall balance sheet before we finalize? Balance sheet classified into how many categories? Equities and liabilities and assets. Equities and liabilities again classified into 4 categories. Shareholders fund, share application money pending allotment, non-current liabilities, current liabilities. Shareholders fund, share capital, reserves and surplus, money receivable again, share warrants. Then share application money pending allotment. Non-current liability classified into long-term borrowings, deferred tax liability debt, other long-term borrowings, long-term provisions. Correct, sir? Then you are having current liability, man, short-term borrowings, trade payables, other current liabilities, short-term provisions. That's it, game over. With regard to assets, man, non-current assets and current assets. Under non-current asset, you are having PPE, intangible asset, capital work in progress, intangible asset under development. Sir, you are having still money, non-current investment, still money, deferred tax asset net, still money, long-term loans or advances, still money, other non-current loan, other non-current assets. Coming to the current assets, man, first you safeguard yourself with the current asset. Do the current investment. You have not started the business for that. Buy the inventory, convert it to trade receivable, get the cash and cash equivalent, do the short-term loans and advances and other current assets. Comfortable? I am with you, sir, from your heart. Anybody is there? Where is a grand clap? This is just an introduction to schedule 3, my dear lovable students. Before you listen to the next lecture, ensure that you are writing 3 times whatever charts you have written. Then you will be feeling very level comfort. Yes, sir. Sir, very, very, very happy afternoon to all. So we are doing schedule 3 format. In that we have done the format of the balance sheet in the class number 1. We are moving into class number 2, which is the overview of the P&L format, my dear lovable students. What is the format of the balance sheet? Very quickly we can go through. Balance sheet classified into 2 categories. equity and liabilities, and number 2 is assets. For equity and liability, again classified into 4 category. Number 1, shareholders fund, share application money pending allotment, non-current liabilities and current liabilities. Right, sir? Under shareholders fund, you are having share capital, reserves and surplus, money received against share warrants. Under share application money pending allotment, we don't have further classification. Under non-current liability, you are having 4 further classification: long-term borrowing, deferred tax liability net, other long-term liabilities and long-term provisions. Under current liability, you are having 4 classification: short-term borrowing, trade payables, other current liabilities, short-term provisions. Under assets, you are having mainly 2 sub-classification. Number 1, non-current assets and current assets. Sir, first, sir, look on yourself. That is invest in PPE, intangible asset, capital WIP, intangible asset under development. Then non-current investment, deferred tax asset, sir, long-term loans and advances, other non-current asset. Under current asset, try to secure yourself by investing in current investment. Then try to invest in inventory, then trade receivable, cash and cash equivalent, short-term loans and advances, other current assets. Comfortable? This is just the overview of the balance sheet. In the same way, we are moving into the overview of the Schedule 3 P&L account, my dear lovable students. We are going to talk about how we have to prepare the Schedule 3 P&L, format of the statement of P&L. Format of the statement of P&L. The first one is revenue from operation. The first one is what? Revenue from operation means our sales. Technically, which is credit side of the trading account. We used to write that by sales. That's what revenue from operation. So the first item in the Schedule 3 P&L is the revenue from operation. Then number 2 is other income. That's it. Number 2 is what? Other income. Number 2 is other income. So these are the major income. So if you see, the trading account will be having buy sales and all indirect income will be crediting. Right, sir? The same way, you will be having revenue from operation and other income. Number 1 is what? Revenue from operation. Number 2, then my dear lovable students, you will be getting the total income. You will be getting the total income. Total income. Are you really with me? So first one, revenue from operation, add other income, you will get the total income. You will get the... Now coming to the fourth part called as expenses. That's it. Credit side of the trading account, P&L account done. Number 1, revenue from operation. Number 2, other income. You will get the total income. Coming to the expenses, man, which comprises of, sir, debit side of the trading account and also debit side of the P&L account. Correct? Number 1, cost of material consumed, which is raw material consumed. Which is what? Raw material consumed. For a manufacturing concern, raw material consumed will be there. And purchases of stock in trade. Purchases of stock in trade. Purchases of. First one, raw material consumed. Purchases of stock in trade. Purchases of. Then changes in inventory of the finished goods. Changes in inventory of the WIP. Changes in inventory of the stock in trade. Changes in inventory of the... So this stock in trade means what material? Raw material. Are you really with me? So my dear lovable students, here they are typically presenting a manufacturing account. They are typically presenting a... The first one is cost of raw material consumed. Cost of raw material. Sir, purchases of what in trade? Stock in trade. Then changes in inventory. We all know that there are 3 categories of inventory are there. We are having raw material. We are having WIP. We are having finished goods. First one, changes in inventory of finished goods. Changes in inventory of WIP. Changes in inventory of stock in trade. So stock in trade means raw material or finished goods? Raw material. So first one, raw material consumed. Raw material, which is raw material consumed. Then purchase of stock in trade. Purchase of. Then changes in inventory of finished goods. Changes in inventory of WIP. Changes in inventory of. I have taken care of the trading account. I have taken care of the Then coming to the P&L account, employee benefit expenses. Employee benefit, finance cost. Tell me. Depreciation and amortization expenses. Tell me. Other expenses and total expenses. So a lot of items are there. We have to take care one by one by one. First one, income side. First, what is the first income? Revenue from operations. Are you really with me? Second one, other income. If I add revenue from operation and other income, I will get the total income. That's it. Income part comes to an. Now, with regard to the expenses part, in that expenses fourth area, first I will be dealing with the goods. Correct? The first one, the first item, raw material consumed. Raw material consumed. That is what? Cost of material consumed. Cost of material consumed. What is the first one, man? Cost of material. Is it raw material consumed or cost of material consumed? Use the same word. Cost of material consumed. Tell me. And you will be purchasing the raw material, right? When you purchase the raw material only, you can consume the raw material, right? That's what purchases of stock in trade. Purchases of. The first one, cost of material consumed. In order to consume the material, I have to purchase of what in trade? Stock in trade. Sir, there will be difference between opening stock and closing stock of raw material, opening stock and closing stock of WIP, opening stock and closing stock of finished goods. Right, sir? This is called as changes in inventory. This is called as what? This is called as changes in inventory. This is called as. So, changes in inventory of finished goods, changes in inventory of WIP, changes in inventory of stock in trade. Repeat once again. Changes in inventory of finished goods, changes in inventory of stock in trade. So first one, come once again, expenses. Cost of material consumed, purchases of stock in trade, changes in inventory of finished goods, changes in inventory of WIP, changes in inventory of. That's it. Goods related, trading account related matter done. Are you really with me? Sir, you need employees to work. Correct? You have employee benefit expenses. You are having. Then you will be having finance cost. What cost? Then you will be having depreciation and amortization expenses. Depreciation and you will be having other expenses. And you will be having. So mainly the expenses. First they are classifying expenses relating to goods. Expenses relating to. Then they are classifying expenses relating to employees. Expenses relating to. Then they are classifying expenses Finance cost. What cost, man? Sir, then they are classifying depreciation and amortization. Are you really with me? Then finally they are classifying other expenses. What expenses? Mainly five things. Number one, expenses relating to goods, expenses relating to employees, finance cost, depreciation and amortization, other expenses. So mainly five classification. Repeat once again. Expenses relating to goods, expenses relating to employees, finance cost, depreciation and amortization, other expenses. Repeat once again. Expenses relating to goods, expenses relating to employees, finance cost, depreciation and amortization, other expenses. Comfortable? So my dear lovable students, with regard to goods, you will be having cost of material consumed. For the purpose of consumption, you will purchase the stock in trade. Are you really with me? There will be changes in finished goods, changes in WIP, changes in stock in trade. Are you really with me? So these are the expenses you will be incurring relating to the goods. Then you will be having employee benefit expenses. Then you will be having finance cost. Then you will be having depreciation and amortization. Then you will be having other expenses. If you add all these, you will get the total expenses. You will get the. So once again, from start, this is the format of the P&L account. Number one, revenue from operations. Add other income. You will get the total income. This is one part, right, sir? From this total income, I have to reduce the total expenses. Mainly the expenses classified into 5 categories. Number 1, expenses relating to goods, expenses relating to employees, then finance cost, depreciation and amortization, other expenses. Are you getting it? If you add all the 5, you will be getting the total expenses. What expenses? So from the total income, if you reduce the total expenses, you will be getting profit. You will be getting before exceptional and extraordinary item and tax. Oh my God. So you will be getting what? Profit. What you will be called it as? Profit. Sir, this profit is before exceptional, extraordinary item and tax. Before 3 things. Before 3 things. Number 1, exceptional and extraordinary item and tax. Exceptional, extraordinary item and tax. 3 things. Exceptional and extraordinary item and tax. So set number 1, income. From that income, you have to reduce the expenses. You will get the profit. But that profit will be before exceptional and extraordinary items and tax. Right, sir? From that, you will be having exceptional item. You will be having. So the first one, before exceptional. So I am knocking off that. So you will be getting profit before extraordinary and tax. Then I will knock off the extraordinary. You will be getting profit before tax. Are you really with me? Then pay the tax. Tax expense, which is current tax, and you will be getting the profit or loss for the period from the what operation. From there, profit or loss from the what operation. Then for this tax expenses of the what operation. Discontinuing. Then you will get the profit or loss from the what operation. After tax. After tax. Now profit or loss for the period, which is what plus item number what plus item number what. Continuing, this is one. This is what the profit or loss from the continuing operation, right, sir? Plus, sir, this is the, sir, the profit or loss from the discontinuing operation after tax. Then on the face of the P&L, you will be having earnings per equity share, which is basics and what? Dilute. Basics and? So you have to come one by one. First is set, sir, leave the 16 item or 14 item. I will come to 16 item one by one. Just set the format how schedule 3 running. P&L account. First one, income. Total income. Correct? This total income comprises of 2 income. Number 1, revenue from operation and also other income. Are you really with me? After the total income, then you will be having total expenses. This total expenses comprises of 5 expenses. Correct, sir? Expenses relating to goods, expenses relating to employees, finance cost, depreciation and amortization, other expenses. Comfortable? Fantastic to the course. So from the total income, if you reduce the total expenses, you will be getting the profit. This is the third item. 1, 2, 3. Correct? So before 3 item. This is the third item. So before 3 item. Number 1, profit before exceptional, extraordinary and tax. What and all, man? Exceptional, extraordinary and tax. Repeat once again. Exceptional, extraordinary and tax. Are you really with me? In that, consider the exceptional. Consider the. Then automatically profit before extraordinary and tax. Before extraordinary and look at here. Sir, you will be getting here, sir, total expenses, profit before exceptional and extraordinary item and tax. Exceptional, extraordinary item and tax. Repeat once again. Exceptional, extraordinary and tax. Comfortable? From that, consider the what item? exceptional item. What item? So you will be getting profit before extraordinary item and tax. Profit before extraordinary item and tax. Comfortable? So now you consider the what item? Extraordinary item. You will be getting the profit before tax. Profit before tax. Hello, sir. From that, pay the tax. Sir, tax expenses which comprise of what tax? What tax? The answer you will be getting is profit or loss for the period. Abde solle, profit or loss for the from the continuing operation. From the profit or loss for the period from the continuing operation. Shall we come from first? First one. What is the first set? Total income. Total. Basically, this comprises of revenue from operations and other income. Comfortable. Number two, total expenses. Basically, this comprises of expenses relating to goods, expenses relating to employees, finance cost, depreciation and amortization and other expenses. Comfortable? You will be getting the profit before three item. Before three item. Number one, exceptional, extraordinary tax. Are you all really with me? Knock off the exceptional. That means reduce exceptional. You have to reduce the exceptional expenses. Are you really with me? Then you will be getting the profit before extraordinary and tax. Comfortable? Knock off the extraordinary. You will be getting the profit before tax. Profit before tax. Always the tax will be comprises of two tax. One is current tax, deferred tax. Current tax. If you knock off the profit before tax, you will be getting profit or loss for the period from continuing operations. From what? Profit or loss for the period from the continuing operation. Sometimes there may be discontinuing operation. There may be. That has to be separately shown in the P&L. Are you really with me? That's what profit or loss from discontinuing operations. Profit or loss from. So since I have not included the profit or loss from discontinuing operation above, if it is profit, the total profit increases. Automatically I am liable to pay tax for that profit from discontinuing operations. That's what tax expenses of discontinuing operation. Then I will get the net profit from the discontinuing operation. That's what profit or loss from the discontinuing operation after tax. After. So here I am having profit or loss from the continuing operation. Here I am profit or loss from the discontinuing operation. So profit or loss from the continuing operation plus profit or loss from the discontinuing operation. If I add both, I will be getting the total profit or loss for the period. Are you all really with me? This profit has to be distributed to the equity shareholders, my dear lovable students, which I will be calculating the basic EPS and diluted EPS as per AS 20. As per AS, comfortable? Are you all really with me? So, shall we come, once again comes. Are you all joining along with me? What is the first one? Total income. Total income means nothing but revenue from operations and other income. Are you comfortable with this? Then the second item, total expenses. Total expenses, which comprises of 5 items. Number 1, expenses relating to goods. Number 2, expenses relating to employees, finance cost, depreciation and amortization, other expenses. Comfortable? The third one, my dear lovable students, is the profit before 3 items. Number 1, exceptional item, extraordinary item and tax. Are you really with me? Now knock off, reduce exceptional item. Then you will be getting profit before extraordinary item and tax. Getting it? Then my dear lovable students, knock off the extra. You will be getting profit before tax. Now knock off the tax, which are current tax and the deferred tax. Getting it? I am finalizing what this is called as profit or loss for the period from continuing operation. Sometimes there may be. Then if that is the case, profit or loss for the period from discontinuing operation. If you are having profit or loss, if there is a profit, you are liable to pay tax. Correct? Then you have to reduce what? Tax expenses for the discontinuing operation. What you will be getting? Profit or loss for the period for discontinuing operation, which is after tax. Correct? This is one income you are having and this is another income you are having. If you add both, you will be getting profit or loss for the period. That's it. Are you all really with me? This profit only equity shareholders are entitled. That you have to represent as basic EPS and the diluted EPS. Basic EPS and the... This is what the format of the P&L account. Shall we? Now you read it, you will be having a better understanding than earlier, man. What is the first one? What? Revenue from operations. Everyone, first one. Then you will be having other income. You will be getting total income. Then we have to reduce the... In that first we have to reduce the expense relating to goods, such as cost of material consumed, purchase of stock in trade, changes in inventory of finished goods, changes in inventory of WIP, changes in inventory of stock in trade. Alright? Then expenses relating to employees, employee benefit expenses. Then you have to incur the depreciation and other expenses. You will get the... From the total income, if you reduce the total expenses, you will be getting profit before exceptional and extraordinary and tax. Reduce the exceptional item. You will get the profit before extraordinary item and tax. Reduce the extraordinary item. You will be getting the profit before tax. Pay the such as current tax and the deferred tax. That's it. You will be getting either profit or loss for the period from the continuing operations. Sometimes you may have, if that is the case, profit or loss from the discontinuing operation. Pay the tax. Tax expenses of the discontinuing operations. Then profit or loss from the discontinuing operations after tax. If it is profit or loss, adjust it. Correct? You will be getting profit or loss for the period. That's it. Sir, compute EPS, which are basic EPS and the diluted EPS. Totally how many item? 16 item. How many item? Now we will place one by one. What is item number 1? Revenue from operation. Item number 2, other income. 3, total income. 4, inside that 5 expenses are there, right sir? Yes sir. 5, profit before exceptional and extraordinary and tax. 6, exceptional item. 7, profit before extraordinary item and tax. 8, extraordinary item. 9, profit before tax. 10, tax expenses. 11, profit or loss from the for the period from the continuing operation. 11, profit or loss from the discontinuing operation. 12, tax expenses of the discontinuing operation. 13, profit or loss from the discontinuing operation after tax. Sir, 14, profit or loss for the discontinuing operation after tax. 15, profit or loss for the period. 16, earnings per NSR shares, which are basic and the dilute. Are you really with me? Sir, balance sheet classified how many category? 2 category. What side? What side? Equities and liabilities and assets. Equities and liability classified in how many category? 4 category. Number 1, shareholders fund, share application money pending allotment, non-current liabilities, current liabilities. Under the shareholders fund, you are having 3 classification. Number 1, share capital, reserves and surplus, money against share war. Sir, under share application money pending allotment, no further classification. Under long-term, sir, non-current liability, long-term in nature, you are having long-term borrowings, deferred tax liability net, other long-term borrowings, long-term provisions. Long-term. Under current liability, you are having 4 things, right? Short-term borrowing, trade payables, further classified into 2 category, leave it, other current liabilities and the short-term provisions. Getting it. Asset side, classified into non-current asset, current asset. Under non-current asset, PPE, intangible asset, capital WIP, intangible asset under, then non-current investment, then deferred tax asset net, long-term loans and advances, other non-current asset. Under the current asset, current investment, inventories, trade receivable, cash and cash equivalent, short-term loans and advances and other current asset. Comfortable? With regard to P&L, 16 items are there. Number 1, revenue from operations, other income, total income. That's it. Let's say expenses. You will get profit before exceptional, extraordinary and tax. Reduce the exceptional. You will get the profit before extraordinary and tax. Reduce the extraordinary items. You will get the profit before tax. Reduce the tax, which are current tax and the deferred tax. You will get the profit or loss for the period from the ordinary activity. Continuing operations. Are you really with me? You may have profit or loss from the discontinuing operation. Pay the tax for that. Correct? Tax for the discontinuing operation. You will get the profit or loss from the discontinuing operations after tax. Adjust it. Correct? You will get the profit or loss for the period. Sir, that's ultimate profit. Show the basic EPS and the... I am with you, sir, from your heart. Anybody is there? Where is a grand clap? What you are supposed to do now is you have to write one time schedule 3 balance sheet without seeing. Then it will register in your brain like anything. And you have to write 3 times the format of the P&L. Then we are eligible to discuss what and all items will be covered inside every item. For example, what and all are PPE. For that and all, don't write 3 times. That just normal, general knowledge is more than enough. Because when you see an item in the question, you should know that where this item will go and place. Are you all really with me? That too, without any doubt. If you are having any doubt, you will not be able to complete the question, man. That we will be achieving through practice. So what we'll be doing from the schedule 3 is from tomorrow onwards. We will be explaining 3-4 items in depth and we'll be start doing the questions. Hello, sir. Then before we do the second question, 2-3 items will be explained in depth. Then we'll be solving one question. Hello, sir. So certain item we will be learning and doing in question. Certain item will understand through question and will be learning the provision. So it will be a mix of theory and problem. So it will be, sir, both the safer side for you and also for me. Are you really with me? Before that, just thorough with the format, have a very good idea of the overall understanding. I'm not saying that we have done with schedule 2. We have started schedule 3. That's it. We have started schedule 3 format. That's it, man. In the coming days, we'll be doing one by one question. Are you all really with me? So before next class, ensure you are writing the format 3 times. Then it will increase the flow like anything. Sir, very happy morning to all. Sir, this is the question number 1 of the schedule 3. Following is the trial balance of Omega Limited as at 31/3/2022. Land at cost. Is this a P&L item or balance sheet item? Balance sheet item. In that balance sheet, liability side item or asset side item? This will come under property, plant and equipment. Right, sir? Plant at machinery at cost. They are showing at historical cost, my dear lovable students. This is a what item? balance sheet item. This will come under PPE, property, plant and trade receivable is a current asset item. Sir, under the current asset, it will come under trade receivable, right, sir? Inventory, sir, they want to prepare the balance sheet as on 31/3/2022, right? Inventory is also 31/3/2022. That means what stock? Generally, closing stock will not come inside the trial balance, right? If the closing stock is coming inside the trial balance, then the purchases will be adjusted purchases. What is the concept of adjusted purchases? Opening stock, add purchases minus closing stock, right, sir? So, generally, normal question, opening stock and purchases will be inside the trial balance and closing stock will be outside the trial balance, right? But if the closing stock has been given inside the trial balance, means we have adjusted the closing stock with the what? Purchases, right, sir? Sir, bank will form part of cash and adjusted purchases, my dear lovable students, which is opening stock plus purchases minus closing stock is what purchases? Adjusted purchases. Adjusted. Generally, sir, you will be having opening stock, correct? Add purchases minus what stock? Closing stock, right? The answer what you are getting is called as adjusted purchases. Fantastic to the core. Sir, come on, man. The next one. Factory expenses will be recorded in the other expenses. Administration expense is a part of. Selling expense is a part of. Debenture expense is a part of finance cost. Because we have borrowed money, for that we are paying debenture interest. That's why it will form part of finance cost. Interim dividend paid reduced from the reserves and surplus. Because once you pay the dividend, my reserves and surplus reduces, right, sir? In note number 2 of the balance sheet, we have to reduce from the reserves and surplus. Equity share capital will form part of note number 1. That is what capital? Share. 10% debenture is a long-term borrowings. General reserve will form part of reserves and surplus. Profit and loss account will form part of reserves and surplus, which is opening balance, right? By preparing the current year P&L, you have to find out what is the profit earned during the year, right? Securities premium will form part of reserves and sales will form part of P&L under the head revenue from operation. Trade payable is a current liability. Under that, it will come under trade payable, right? Provision for depreciation. Since the plant and machinery has been given at cost, this is at historical cost. So, provision for depreciation should be reduced from the plant and machinery. Comfortable? And you are having suspense account, man. The clarification for the suspense account should be given in the what information? Authorized share capital of the company is 40,000 shares of how much each? 10 each. This is the authorized share capital, maximum share capital a company can issue, right? So in note number 1, we have to disclose authorized share capital, 40,000 shares of rupees, how much each? 10 each. And only, sir, 3 lakh shares is the issued and subscribed capital. 4 lakh is the authorized capital, but 3 lakh has been issued. So under the authorized capital, you have to write and show 3 lakh rupees is the, sir, called up, paid up, subscribed, right, sir? Company on the advice of the independent valuer who is to reevaluate the land at how much rupees, man? What is the book value of the land? 220. So 220 they are going to revalue at 360. Yeah. There is a difference of 140. Are you really with me? Yes, sir. This 140 company has to pass a journal entry saying that, sir, asset account debit. What is asset name? Land. So they have to debit the land. So land account debit 140 to revaluation reserve account. So this 140 should be written in the PPE. Hello, sir. And in the reserves and surplus, this 140 should be added. Comfortable? Declare final dividend at 10% on the 2nd April. Right, sir? This is an event happening after the balance sheet date. As per AS4, contingencies and events occurring after the balance sheet date. Sir, dividend declared is not an adjusting item. It is a non-adjusting item. Comfortable? Now we are having suspense account. What is the reason or the story for the suspense account has been given? Suspense account of rupees 4,000 represent cash received for the sale of some of the what? Machinery. So you sold actually machinery. Alright. The cost of machinery was how much? 10,000. and accumulated depreciation thereon was 8,000. So I have to reduce the cost of the asset, cancel the accumulated depreciation and book the profit. Right, sir? So technically talking, 10,000 rupees is the cost of the asset, less accumulated depreciation is 8,000 rupees. What is a gap? 2,000 rupees is the net cost. Are you really with me? This has been sold for a selling price of 4,000. So you are having a profit of. So first I have to cancel the suspense account. For that you have to pass the entry suspense account debit. What is the amount? 4,000 is the amount. Right, sir? When I sell an asset, no need to keep the provision for depreciation. Right? So provision for depreciation account debit. How much? 8,000 rupees. I have to cancel. To asset account, sir, what is the cost of the asset gone out? 10,000. Comfortable? Sir, actually 4 plus 8 comes to 12, but only credit comes to 10. To profit on sale of fixed asset comes to 2,000. Comfortable, sir? That's it, man. This entry has to be passed. From the asset value, I have to reduce 10,000. From the provision for depreciation, I have to reduce 8,000. Comfortable? I have to cancel the suspense account. And in the P&L account, other income, I have to book an income of 2,000. Are you able to remember the adjustment what we have done? Depreciation is to be provided at plant and machinery at how much percent of cost? My dear lovable students, the depreciation adjustment is what is the original cost of the value of the plant and machinery? 770 rupees. Comfortable? Is there any sale of the machinery? Yes, sir. What is the cost? 10. So 770 will become 760. Is there any revaluation for machinery? No, sir. There is only revaluation for the. So on this 760, can I provide depreciation? Less depreciation at the rate of how much percent? 10% comes to 76 is the depreciation. So 760 minus 76 will be the value to be carried in the balance sheet. Comfortable? So whatever may be the amount. So this 76 should be debited in the P&L account as depreciation and amortization. Are you really with me? And should be added to the provision for depreciation account and should be reduced fully from the PPE account. Are you able to appreciate? That's what you are required to prepare the Omega Limited balance sheet as at 31/3/2022 and statement of P&L with notes to account for the year ended 31/3/2022 as per what 3. Ignore previous year's figures and taxation, both has to be ignored. First you have to prepare the balance sheet, then you have to prepare the P&L account, then you have to write the notes to accounts relating to the balance sheet, and you have to prepare the notes to accounts related to the P&L account. This is what you are supposed to do. Are you really with me? Sir, you have to try this question with a standard time of 12 to 15 minutes, man. Start doing this, and once you complete, just inform me how many of you have completed. Shall we start the proceeding? Your countdown starts now is the call. Sir, very happy morning to all. Sir, are you ready for today's challenge from schedule 3? Illustration number 2, Haria is the target. You are required to prepare balance sheet and statement of P&L from the following trial balance of Haria Chemicals Limited for the year ended 31st March 2021. Trial balance has been given, my dear lovable students. Only trial balance. They don't have much adjustment. Additional information, closing stock has been given, 8,23,000. You tell me, inventory, generally, closing stock has been given outside the trial balance. So this will be opening stock, correct? This opening stock we have to consider in the P&L account only in the changes in inventory. You have to compare the opening stock and closing stock and you have to write the difference, right, sir? Furniture will form part of PPE. Discount will form part of other expenses. Loan to director. The company has given loan to director, correct? Short-term loans and advances. Because it's company money, we have to get back the money as quick as possible. We will not, sir, misutilize the money, get back the money as quick as possible. Advertisement is form part of other expenses. Bad debt is form part of other expenses. Commission is form part of, since it has been given on the debit side of the trial balance, it will be commission paid. It is an expenses, right, sir? Material consumed will form part of cost of material consumed. We are having one line item called as cost of plant and machinery will form part of PPE. Rentals paid, rent paid will form part of current account. In bank you are having current account is form part of cash, and cash will form part of cash. And interest on bank loan, you got interest, is interest on bank loan you received, means it would have been shown in the credit side of the trading account. This is on the debit side of the trading account, trial balance. So it is an expenses, right? It should form part of other expenses of finance cost. We are having a specific head, so it has to be parked under finance cost, correct? Preliminary expenses, other expenses. Fixtures, it is furniture and fixtures, so PPE. Wages, employee benefit expenses, right? In schedule 3 we don't have a classification of direct expenses and indirect expenses, right? Consumables will form part of other expenses. Freehold land, PPE. Tools and equipment, PPE. Goodwill, intangible asset. Trade receivable, dealers aid, other expenses. We are not considering this as an asset, general expenses, man. Transit insurance, other expenses. Trade expenses, other expenses. Distribution freight, debenture interest, because we would have raised debenture, for that only we are paying the interest, right sir? Sir, equity share capital will form part of share cap. 11% debenture, long-term borrowings. Bank loan, long-term borrowings. Nothing has been mentioned about the repayment, so we are assuming it as long-term borrowings. Trade payable, Sales is revenue from. Rent received is form part of other. Transfer fee is form part of. P&L account will be reserves and surplus opening balance. Depreciation provision only given for machinery. So from the plant and machinery of 8,60,000, you have to reduce 1 lakh, and you are having additional information. Closing stock 8,23,000. This has to be considered in the adjustment, correct sir? Plus this has to be shown as inventory in the balance sheet also. Always when an item has been given in the additional information, it will reflect two places in the financial statement, right sir? Sir, I just want to check that how much time you are taking to solve this question. The ideal time to solve this question is 15 minutes to 20 minutes, my dear lovable students. Are you ready for the challenge? Update me how much time you have taken. Your countdown starts now is the call. Sir, very happy morning to all. Sir, are you ready for the today's schedule 3 challenge? Today, you have to try illustration number 3 from the ICAI study material. This is the question. You are required to prepare a statement of profit and loss and balance sheet from the following trial balance extracted from the books of International Hotels on 31st March. Authorized capital divided into 5,000 6% preference shares of 100 each. So technically 5,000 into 100 will be 5 lakh plus 10,000 equity shares of 100 each will be 10 lakh. 5 lakhs plus 10 lakhs comes to 15 lakh. We all know that authorized share capital will come in the note number 1. Share capital as double underline item will not be counted for the balance sheet total, right sir? They are talking about subscribed capital 5,000 6% preference shares of 100 each 5 lakh. This will come below that note number 1. Equity 8 lakh 5,000. Total 5 lakhs plus 8 lakh 5,000 comes to 13 lakh 5,000. Fine. Sir, purchases. They are having wine, cigarette and cigar. As we already understood when we discussed this question in the class, this wine, cigarette and cigar will be considered as finished goods, whereas foodstuff will be considered as raw material. Wages and salary will form part of employee benefit expenses, right sir? Rent, rates and tax will form part of. Laundry will form part of. Sales, they are having wine, cigarette and cigar. This will be treated as revenue from operation. That too sale of goods. Sale of. And sir, food also will be treated as sale of goods. Coal and firewood is an expense. It will form part of Carriage and coolie will be treated as expense, other expenses. Sundry expenses, advertisement will be parked under, repair will be considered under, renting of rooms is a revenue from operation. But under the revenue from operation, they are having services. So they are having both supply of goods and services, right, sir? Billiard is also revenue from operation, treating it as services. Miscellaneous receipts will be treated as other income. Discount received will be treated as other income. Transfer fee will be treated as other income. Freehold land and building will form part of PPE. Furniture and fittings will form part of PPE. And inventory on 1st April, that means opening stock. Opening stock of finished goods has been given. And opening stock of raw material has been given. I will be seeing the change in inventory for the finished goods. And I will be calculating the cost of material consumed for the raw material. Right, sir? Cash in hand will form part of cash and cash equivalent. Cash with bank will form part of cash and cash equivalent. Preliminary and formation expense will form part of other expenses. 2000 debenture of underage comes to total 2 lakh. Correct, sir? Will form part of long-term borrowing. Since the percentage of interest has been given in the question, you have to treat it as finance cost, and that has to be shown it as other current liabilities. Comfortable? P&L account opening balance has been given. You have to consider it in note number 2, opening balance. Trade payable will be trade payable. Trade receivable will be trade receivable. Investment will be non-current investment. Goodwill at cost will be intangible asset. General reserve will form part of reserves and surplus. Total trial balance total has been given. They are having adjustment. Wages and salary outstanding. Please add this in the employee benefit cost, and this will show it as other current liabilities, because any item which is given off the trial balance will be adjusted as to two places. Inventory closing stock has been given, my dear. Wine, cigarette, cigar, 22,500, which has to be used in changes in inventory, and also in the balance sheet inventory you have to take care. Foodstuff 16,400, you have to take in the cost of raw material consumed, and the 16,400 have to be reflected as the closing inventory in the balance sheet. Comfortable? Depreciation. Provide furniture and fittings at 5%. In the depreciation and amortization, show this, and reduce from the PPE is what the adjustment, and land and building at 2%. Same explanation will suit. Equity share capital on 1st April stood at 7,20,000. Totally 7,20,000 rupees equity share capital was there. That is 6,000 fully paid up shares. So 6,000 into 100 comes to 6 lakh. And 2,000 shares of 60. So 2,000 into 60 comes to 1,20,000. 6 lakhs plus 1,20,000, 7,20,000. It is exactly matching, right, sir? That means they have paid only 60, still 40 was payable. A director made a call of 40 per share on 1st October 2021. Yes, director can call. They made the call. Shareholder could not pay the call on how much share? 100 shares. And the shares were forfeited and reissued at 90 per share as fully paid up. One of the shareholder holding 100 share, he already paid 60, has not paid 40. That means these shares has been forfeited. That means 60 rupees will be profit to the company, right, sir? But these shares has been reissued at rupees 90. So 100 rupees face value share has been issued at 90. So there is a loss of 10 rupees. So from 60 rupees, what we received, if you bear the loss of 10, 50 rupees will be the capital reserve. 50 rupees will be the. So 100 share into 50 comes to 5,000, should be written under the capital reserve. This amount of 5,000 is already there in this 8,05,000. Are you really with me? So you have to segregate this 5,000 from the share capital. You have to pass the journal entry that equity capital account debit 5,000 to capital reserve 5,000. Correct? Huh? So in the new balance sheet, my dear lovable students, your equity capital will not be 8,05,000, will only be 8 lakhs. Comfortable, sir? Sir, my dear lovable students, that's it. And the directors declared a dividend of 8% on equity shares on 2nd April, which is after 31st of March. Transferring any amount that may be required from the general reserve. This is a non-adjusting event as per AS4. Sir, contingencies and events occurring after the balance sheet date. Ignore taxation is a question. The ideal time for this question is 20 minutes, my dear lovable students. Once you are able to complete within 20 minutes without any mistake, update me in the comment section. I'm waiting here. Your countdown starts now. Yes, sir. Very happy morning to all. Sir, this is the fourth question challenge from the schedule 3. From the following particulars furnished by Pioneer Limited, prepare the balance sheet as at 31st March as required by Schedule 3 of the Companies Act. Give notes at the foot of balance sheet as may be found necessary. In this question, they want to prepare only balance sheet. We are not supposed to prepare the P&L account. Can we proceed? Equity share capital, face value of rupees 100, 10 lakh. This will come in note number 1, which is share capital. Right, sir? They are having calls in arrears. Calls in arrears means the company have called, but the shareholder has not paid, which should reduce from the share capital. Land is form part of PPE. Building will form part of PPE. Plant and machinery will form part of PPE. Furniture will form part of PPE. General reserve will form part of reserves and surplus. Loan from State Financial Corporation. Generally, if nothing has been mentioned, long-term borrowing. Right, sir? Otherwise, we have to check the note. Inventory, they have given. Finished goods and raw material. My dear lovable students, since we are supposed to prepare only balance sheet, they would have already prepared the P&L. So, all the nominal accounts will be closed. That means inside the trial balance, we will be having closing stock. This will come as closing inventory in the balance sheet. Comfortable? Provision for tax is a provision which we have to pay within 12 months. So, this is short-term provisions. Right, sir? Trade receivable is forming part of trade receivable under the current asset. Advances means nothing has been given. So, it will be treated as short-term loans and advances. Correct, sir? Because we will not give our money for very long time. It will affect the business. Are you really with me? Dividend payable, already it is there inside the trial balance, which we have to pay by within 12 months technically. So, this will be other current liabilities. Profit and loss account, they have finalized. So, this will form part of cash balance, will form part of cash and cash equivalent. Cash and bank will form part of cash and cash equivalent. Loan unsecured. This is also long-term borrowing. So, under long-term borrowing, we will be having secured loan and also unsecured loan. Trade payables for goods and expenses. This will form part of trade payable. That's it with the trial balance. Right, sir? Following additional information is also provided. This will be useful to segregate the notes. 2,000 equity shares were issued for consideration other than cash. So, when you are preparing the note number 1, which is share capital, in that bracket, you have to write that out of the above, 2,000 equity shares were issued for consideration other than cash. Trade receivable of 52,000 are due for more than 6 months. That means we are having trade receivable, my dear lovable students. How much lakh? 2 lakh. Out of the 2 lakh in notes to accounts, you have to split 52,000 separately and 2 lakh minus 52,000 separately. Right, sir? The cost of the asset, original cost, has been given in the question. Compare this cost and also the value given in the trial balance. Sir, surely the value given in the trial balance will be after depreciation. So, this cost minus value given in the trial balance will be the depreciation that you present in note number PPE. Comfortable, sir? The balance of 1,50,000 in the loan account with the SFC, that is State Financial Corporation, is inclusive of rupees how much? 7,500 for interest accrued but not due. That means this will not form part of the long-term borrowing. So, out of 1,50,000, you have to separate or segregate 1,50,000 into 2. 7,500 and 1,50,000 minus 7,500. Comfortable? The loan is secured by hypothecation of the plant and machinery. That means they have mentioned that it's a secured loan. Sir, that means in bracket you have to, sir, inform to the users of the financial statement that the loan is secured by hypothecation of the plant and machinery. Comfortable? So, this 7,500 should be paid within next 12 months. Hence, it should form part of other current liabilities. Right, sir? And 1,50,000 minus 7,500 will be the long-term borrowings. Balance at bank include 2,000 with Perfect Bank, which is not a scheduled bank. So, under the cash and cash equivalent, you have to show that how much is the cash available with the bank and how much is the cash in hand. In that cash available with bank, how much with the scheduled bank and how much with the other than scheduled bank. Company had contract for the erection of plant and machinery of rupees 1,50,000, which is still incomplete. That means company has given an advance of 1,50,000. My dear lovable students, we are assuming that there is no contingency to complete that contract, my dear lovable students. So nothing has to be mentioned. This is not a contingent liability. We are assuming positively that the contract will get completed of 1,50,000. Comfortable? So my dear lovable students, you can try this question, Pioneer Limited question. The ideal time complete this question is 15 to 80 minutes. This is the today's challenge. Sir, once you complete, update your comments in the comment section that how much time you have taken. Your countdown starts now is the call. Yes, sir. Sir, very happy afternoon to all. So we are doing cash flow statement. Actually, this is the second chapter of our advanced accounting. Because in chapter number 1, we studied how to write the financial statement or how to present the financial statement. Basically, till now, we have presented the financial statement with a T-shaped format. Right, sir? But globally, that is not acceptable because every chartered accountant will prepare the financial statement as per their will and wish. So what Companies Act 2013 is saying that please have a common format for the presentation of the financial statement. Like you should have a Schedule 3 balance sheet, you should have a Schedule 3 P&L, sir, followed by the notes to accounts. First notes to accounts should be followed by the balance sheet and then followed by the P&L. When you see that financial statement, users of the financial statement will never know able to understand from where the cash has came and where the cash has gone. Because that is a limitation of the what statement? Financial statement. So Companies Act is saying that in your financial statement, you have to attach the cash flow statement also. So if there is no particular format, even this is also a format based chapter only, but logical format based chapter. Sir, if you don't follow a particular format to prepare the cash flow statement, one person will prepare the cash flow statement according to their will and wish. So what this standard is saying that you have to analyze the cash flow. The cash flows has been classified into 3 categories. Number 1, cash flow from operating activity because that is a major activity from the operations of the business. Number 2, cash flow from the investing activity and the cash flow from the financing activity. So my dear lovable students, what that operating activity is saying that, sir, purchase of goods or selling of goods, sir, cash sales, collection from debtors, salary paid, sir, all these things will form part of the cash flow from the operating activity. That is a major part or 90% of the cash flow should be from the cash flow from the operating activity. Sir, in order to operate the business, you will be invest in the fixed asset. So that's what cash flow from the investing activity. Sir, in order to do both operating and investing, I need fund. That's what cash flow from the financing activity. So there may be 2 type of question in our exam. Number 1 is called as direct method and number 2 is called as indirect method. This is in examination perspective I am talking about. Sometimes in exam or in practical also, we may have cash and bank account. Cash and bank account is fully available. If cash and bank account is fully available, my dear lovable students, then perfect, pakka. Then very simple, you can prepare the direct method. You can prepare the direct method in the sense means, sir, if you see, hello sir, the cash and bank balance, you know what is the opening cash and bank balance? If you see the receipt side of the cash account, you will be having cash flow from operating activity, cash flow from investing activity and cash flow from financing activity. Pick the cash flow and put it under the respective head. And if you scrutinize the payment side of the cash flow statement, my dear lovable students, you can see the cash flow from the operating activity, cash flow from the investing activity and cash flow from the. So basically what you are going to do is you will be having a cash account. In that opening balance will be there, closing balance will be there, all the receipts will be there in the receipt side of the cash book and all the payments will be there in the payment side of the cash book. This receipts you split into 3 categories. One is as operating activity, financing activity, investing activity and place under the respective head. Comfortable? And this payment you classify into 3 categories. Cash flow from the operating activity, financing activity and the investing activity. This you knock it off. Operating activity plus and operating activity minus. Financing activity plus and financing activity minus. Investing activity plus and investing activity minus. Comfortable? You will be getting the net cash flow from all the activities. To that, if you add the opening balance, automatically you will get the closing balance. This is one way of presentation of the cash flow statement. Now coming to the second way called as indirect method. Are you all really with me? Sir, in every situation, every case, we may not have the full cash account. We may not have the full. We have only the P&L account and the balance sheet, which is nothing but the financial statement. What you have prepared in schedule 3, that will be given to you. Sir, when you see the schedule 3, indirectly, I am going to calculate the cash flows. Are you really with me? So, every case, sir, cash and bank account will not be available. So, we have to prepare the cash flow statement from the schedule 3 financial statement. So, what is available in the question? Balance sheet will be given in the question and the P&L will be given in the question. Are you really with me? So, my dear lovable students, sir, we have to start either from the balance sheet or from the P&L. Indirect method is saying that start from the P&L. Start from the, why you have to start from the P&L? Logic. Because you are having 3 cash flows. One is cash flow from operating activity, cash flow from financing activity, cash flow from investing activity. The major cash flow is shown in the P&L because P&L account shows the operating profit. P&L account shows the. So, my dear lovable students, it's better to start from the P&L. If you see the P&L, you will be having net profit. You will be having. What this method is asking us is assume net profit. Assume net profit. Tell me. Assume net profit as cash flow from the operating activity. As cash flow from the. Because this profit I got by way of sale. Are you all really with me? This will be having cash sale and also the credit sale. Are you all really with me? And I will be having purchases to purchases. I will be having cash purchases and I would have surely got the gross profit. That gross profit would have been credited to the P&L account as by gross profit drawdown. Correct? From that gross profit, I would have incurred so much of indirect expenses. Sir, I would have debited the depreciation. Are you all really with me? And I would have reached or received the net profit. What indirect method is saying that take this net profit as the cash flow from the operating activity. Operating. Why, sir? Because cash account or bank account is not available. But this is not correct. Absolutely not correct. There is no doubt about it. But somewhere we have to start. Then only we can move forward. Right, sir? So, what indirect method is saying that start with net profit as per P&L account. Net profit as per. Net profit as per. Alright, sir. If you start net profit as per P&L account, the purpose of preparation of P&L account is to find out the profit or loss. Is to find out the. There we will never think that whether an item is a cash item or a non-cash item. Whether a cash flow is an operating activity or financing activity or investing activity. Such thought will not be there. Are you really with me? So, inside this P&L account, impurities will be there. Inside this P&L account, impurities will be there. Such as, sir, for the purpose of finding out the profit, I would have debited depreciation. Are you all really with me? Is the depreciation cash item, non-cash item? Non-cash item. But I will debit depreciation for the purpose of finding out the correct profit. Correct? Because of debiting the depreciation in the P&L account, my net profit would have been reduced. If I say that this is my what profit? Operating profit. Then it will be a blunder. Are you really with me? So what I have to do is, I have to take the net profit as per P&L account. Comfortable? Sir, add. Tell me. Add. Tell me. Depreciation debited to P&L account. Tell me depreciation debited to. Since this is a dash cash item. Dash cash item. I will get the cash flow from operating activity. I will get the. So what I have to do is, I have to scrutinize the debit side of the P&L account. I have to scrutinize the. So what I have to do, I have to take the net profit as per P&L account. Net profit as per. And first impurities has to be removed. The first impurities is non-cash item. What cash item? Such as depreciation, goodwill written off, preliminary expenses written off, deferred revenue expenditure written off. If any such item which has been debited to the P&L account for the purpose of finding out the correct net profit, all those items should be added back. Because when I am preparing the P&L, my mindset was to find out the correct profit. But I am using that P&L to find out the cash flow from operating activity. Are you really with me? Sir, because of debiting these items, my profit would have been reduced, but my cash would not have been reduced. Are you understanding? So that is an impurity as per AS3. So that has to be removed by way of what? Back, added back. Then the effect will be, it will be treated as if such impurities has not been debited in the P&L account. Clear? First impurity, this is impurity number 1, has been removed. Now, my dear lovable students, impurity number 2, impurity number, sir, sometimes I would have invested in another company's share. Sometimes I would have invested in a real estate property. From there, I would have got the rent. From there, I would have got the dividend. From there, I would have got the interest. Are you really with me? When I prepare the P&L account, my intention is not to prepare the cash flow statement. My intention is to find out the correct profit or loss. Right, sir? So, I would have credited by dividend received, by interest received, by profit on sale of investment. All those investment I would have credited. Are you all really with me? You tell me, is this a cash flow from operating activity? No. Are you really with me? Because dividend received is a cash flow from investing activity. Are you really with me? And sir, interest received is a cash flow from investing activity. Are you really with me? Profit on sale of investment is a cash flow from investing activity. Are you getting it? And the same will be there in the debit side of the what account also? P&L account also. Sometimes I would have paid dividend. Sometimes I would have paid interest. There will be loss on sale of what asset? Fixed asset. Are you getting it? So that is what impurity number 2. Impurity number? Sir, what impurity number 2 is saying that I would have credited other family income such as cash flow from investing activity, cash flow from finance. Because of crediting those items in the P&L account, my credit side of the P&L account increases. If my credit side of the P&L account increases, my net profit increases. I started with that net profit only. That net profit is a wrong net profit. Are you really with me? Why, sir? Why you credited? Yeah, when I prepare the P&L, my intention was to find out the correct profit. Are you really with me? Yes, sir. But now I am trying to calculate the cash flow from the operating activity. Are you really with me? Then I have to remove the impurities. I have to remove the. So I am reducing. Hello, sir. Or first I will add, then I will reduce. Okay, sir. Because when I add, I will get a positive number. Then I will reduce. Add cash flow. Tell me what? Related to. Tell me. Other activities. Other what? Activities. Such as, can you say example number 1? Dividend paid. Dividend paid. If any dividend paid debited to P&L account, it is not a cash flow from operating activity. It's a cash flow from financing activity. Because of debiting the dividend in the P&L account, my cash flow from operating activity would have reduced. Logic accepted. Sir, add number 2 is interest paid. Interest paid. Because of debiting interest paid in the P&L account, my net profit would have been reduced. It's not a cash flow from operating activity. It's a cash flow from what activity? Financing activity. Are you really with me? Yes, sir. Hence, it has to be added back to find out the correct cash flow from the operating activity. Are you really with me? Sir, the next one, man. I will be reducing cash flow from other activities. Cash flow from what? Other such as dividend received. Is it an income? Yes, sir. Number 2. Interest received. Is it an income? Yes, sir. Number 3. Profit on sale of fixed asset. Are you really with me? If I say profit on sale of fixed asset, here I may have loss on sale of fixed asset. Loss on sale of fixed asset is neither a cash flow item at all. It's a dash cash item. Because if I am having a cost of 1 lakh rupees, if I am selling that item for 80,000 rupees, I will not realize 20,000 at all. Yes, I will realize only how much? 80,000. So I will be getting the cash flow of only 80,000, correct? But since the sale price is less than the book value, I am debiting the difference of 20,000 to my P&L account. Are you really with me? So this is not a cash flow or cash item at all. Getting it? So but this will be debited in the, because of debiting that item, the net profit will reduces. But I want the cash flow from the operating activity. In order to find out the cash flow from the operating activity, I should what back? Are you really with me? Are you really with me? So this is called as impurity number 2. Impurity number. So what you are supposed to do? Sir, I am going to prepare the cash flow statement by using the indirect method. Comfortable? If I have to start, I have to either start with the balance sheet or I have to start with the P&L account. Correct? If I am starting with the balance sheet asset side will show cash flow from the investing activity and balance sheet liabilities side will show cash flow from the financing activity. Sir, why I have to go for investing activity or for financing activity? I am standing not for investment. I am running business not for financing. I am running business mainly for the operating. Right? So what AS3 is saying that, listen very carefully. This is what method? Indirect method. Right, sir? You start with the P&L account, my dear lovable students, which is net profit as per P&L account. Are you really with me? Take this as operating profit. Blunder. This can never be a, because when you are preparing the P&L account, in the P&L account debit side, you would have debited so many non-cash items like depreciation, amortization, sir, written off, all those items. All should be what back? So add impurity number 1. What is impurity number 1? Depreciation or amortization or provisions or deferred tax items. Are you really with me? Yes, sir. Sir, these all should be what back? Added back. So I will be getting subtotal. Are you really with me? Can you say that this is the cash flow from operating activity? Never, sir. Because still there are impurities are there. Are you really with me? Which is nothing but impurity number 2. Which is nothing but, sir, you should add back the cash flow relating to other activities. Are you really with me? Such as, sir, interest paid, dividend paid, sir, loss on sale of fixed asset, etc., etc. Are you all really with me? So, my dear lovable students, sir, is it enough? No. Because on the dash side of the P&L, credit side of the P&L, I would have credited so many income from the other activity. Because of that, my net profit would have been increased. Correct? So, I have to reduce the cash flow from other activity such as interest received. Are you all really with me? Then dividend received. Are you all really with me? Profit on sale of fixed asset. Are you all really with me? Then you will be getting that amount, man. Hello, sir. Now, I am saying that that's it. That's a cash flow from the what activity? Operating activity. But there is one more problem. What problem? I will tell you, man. If you see the P&L account, by sales is there? Absolutely. Sales are operating activity. There is no doubt about it. To purchases is there? Absolutely. Purchases are operating activity. There is no doubt about it. Hello, sir. But the sales is having both what and what? Cash means I would have received the cash. Credit means I would have still not received the. Are you really with me? But because of crediting the credit sales in the trading account, my credit side of the trading account increases. Yes, sir. Because of increase in the credit side of the trading account, hello, sir, my net profit increases. That net profit only I have taken as cash flow from the operating activity. Understood? So that is an absolute blunder. Hello. So what the indirect method is saying that adjust impurity number 3. Adjust what? Adjust what? Which is nothing but the changes in the credit sale, changes in the purchases. Are you all really with me? Which is called as working capital changes. Which is called as? This is the third impurity. Are you all really with me? That means from the, sir, net profit of the P&L account, I will move into the balance sheet. Are you all really with me? In that balance sheet, I am having fixed asset and I am having equity and liabilities and I am having current liabilities. Are you really with me? Sir, current asset is related to debtors. Inside current asset only trade receivable will be there. Credit sales and the trade receivable is having connection. Comfortable? Yes, sir. So, I will be adjusting the cash flow from operating activity after adjusting the impurity number 2, which is called as cash flow. Tell me. Before working capital changes. Before what? Before what? Working capital changes. Before what? Then I will adjust the changes in the current asset. I will adjust the. Then I will adjust the changes in the current liability. Then I will adjust the changes in the. If I adjust the debtors, automatically my credit sales will get adjusted. Are you all really with me? If I adjust the creditor, automatically credit purchases will get adjusted. Are you all really with me? Are you all really with me? Sometimes I would have not paid wages. Wages payable will be there. But to wages I would have debited in the trading account. Correct? Still it is a what activity only? Operating activity only. Since it is a what activity? Operating activity. I would have not taken care in impurity number 1. Because in impurity number 1, I will be treating only the non-cash item. Comfortable? And in impurity number 2, because there I will be dealing with the 2 things. One is cash flow from the financing activity and the cash flow from the investing activity. Since wages paid is a cash flow from the operating activity, I would have not included in impurity number 1 or impurity number 2. But in order to find out the correct profit, even wages outstanding would have been debited to the P&L account. Are you getting it? But that is still payable. So because of that, my GP reduces. Able to follow? Because of that, my NP reduces. But I have started with the net profit as per the P&L account. Hello, sir. Then I cannot say that that is a correct cash flow from the operating activity. So that wages payable will be there in the liability side as wages outstanding. Comfortable? So from here, I will take a U-turn and I will go to the balance sheet and I will adjust all the items of the what asset? Current asset. Because I am having current asset for the purpose of operating my business. Hello, sir. Sir, I am having current liability because of I am operating the business. Are you all really with me? Sir, I am, issuing debenture, which is a long-term borrowing, which is a long-term, not for my working capital requirement, correct? But salary payable, wages payable, rent payable, printing and stationery payable, sir, creditors payable, trade creditors, everything I am having, my dear lovable students, just for operating my business. Hello, sir. If anything is payable, it will be shown under the current liabilities. Comfortable? And if anything is receivable relating to business, such as cash and cash equivalent, hello sir, such as trade debtors, hello sir, such as the next one, short-term loans and advances, because I will give short-term loans and advances to my creditor. To my what? Creditor. Are you all really with me? For my supplier, I would have paid short-term loans and advances, which is my current asset. Comfortable? Everything would have been parked in the what asset, man? Current asset. So I will be adjusting the changes in the what capital? Working capital, which is my impurity number 3. Then I knock off the current asset and the current liabilities. Then the answer what I am getting is called as cash flow from the what activity. So if I adjust this, means I will be getting cash flow from what activity? Before tax. Before what? Before what? Because from this I am liable to pay the tax. Are you all really with me? Tax is not a operating activity, financing activity or investing activity, but still I have to pay the income tax because of operating my business. So tax payment should be adjusted against the lesser tax paid. Comfortable? You will be getting the cash flow from the operating activity. So by that time, you would have completed the entire P&L. By that time, you would have completed the balance sheet. What asset and what asset? Current asset and current liability. Comfortable? Now you are having fixed asset in your hand. This is nothing but cash flow from investing activity. Done na? This is nothing but cash flow from financing activity. If you add or adjust all these things, that's it, man. Your cash flow statement is ready to present to the users of the financial statement. This is called as what method? That means directly I can take the cash flow. I am indirectly taking the cash flow. This is the format of the indirect method, man. Now you tell me net profit after tax. Tell me. So I have to start with the net profit after tax, because after tax only in the P&L account it will be available. Correct? If not, in case not available, take the difference in the reserves. Take the difference in the For example, P&L account has not been given in the question, then I have to go and see the reserves and surplus of the balance sheet. Correct? Sir, generally, I will take the net profit after tax as per the P&L account. If it is not available, I will see the difference in reserves. I will see then I will add tax expenses. Sir, assume that net profit after tax has been taken. Are you all really with me? Is the tax, sir, primarily a cash flow from operating activity? No, sir. But I would have debited the tax. Correct? Because I started with net profit after tax. So, add the tax expenses. Comfortable? Yes, sir. You will get the profit before tax. Then, impurity number 1. Adjust the non-cash items such as depreciation and amortization or the return of. Are you all really with me? And, sir, impurity number 2, like non-operating expenses. What paid? Interest paid. Interest or what? Less interest or what income? Dividend income. Add loss on sale of PPE or intangible or investment. Less gain on sale of PPE, sir, intangible or investment. Are you all really getting what I am talking? Second impurity also done. Then you will be having the operating assets or what adjustment? Liability adjustment, which is nothing but cash flow before the working capital changes. Correct? Then you have to adjust the debtors, creditors, accrued expenses, prepaid expenses or inventories. Hello, sir. How to adjust? What is the rule of adjusting? Why we are adjusting? I will teach you. Don't worry at all. Hello, sir. Sir, you may have either increase in current asset or decrease in current asset. Or you may have increase in current liability, or there is a relationship for that current assets and current liability that I will teach you at all. Sir, less what paid? Tax paid. Whatever tax you have, added back. Sir, then this cash flow is called as cash flow before tax. From that, we have to reduce the tax. You will be getting the cash flow from the operations. This is the way of, sir, indirect method. So, do not include what payable, interest payable, or what for tax, provision for tax, or what payable, dividend payable in the above workings. They will be adjusted along with the relevant interest paid or received or tax paid or dividend paid in the appropriate head. Are you all really with me? So, we are talking about the indirect method. Indirect method means I will be starting with the net profit as per P&L account. Are you all really with me? I will start as per net profit as per. Then, you should be very careful, man. I will remove impurity number. I will remove impurity number. I will remove impurity number because this is what 3 AS3. Hence, we are having 3 impurities. Are you all really with me? Impurity number 1 is what cash item? Non-cash. Any non-cash item debited to P&L account should be added back. That's it. Game over. Comfortable. Impurity number 2. 2 impurities are there. Cash flow from the financing activity and cash flow from the. That's it. Because 2 means 2 things should be removed. Are you all really with me? Sir, impurity number 3. 3 things should be there. Working capital changes. Are you all really with me? I have to adjust the current asset and I have to adjust the current liability. I will be getting cash flow from the operating activity. That's it with regard to the format of the indirect method. Logically encoded. Yeah. I am with you, sir, from your heart. Anybody is there? Where is a grand clap? We are having one demo question in the ICAI study material. How this method will be working using indirect method. Actually, by that, we are done all the ICAI illustrations. Hello, sir. After this question, we are having only, sir, additional question for practice, that is book back. Then from tomorrow onwards, we can start trying one by one. Look at here, man. This is 2022 and this is 2021. Is the P&L account given? First question. Straight away cash and bank account given or financial statement given? If financial statement has been given, we can't do the direct method. Comfortable? We have to do the. So following is the balance sheet of Fox Limited. You are required to prepare the cash flow using the indirect method. Comfortable? Shareholders fund, share capital. Look at here. How much was the share capital in the start of the year? But it has become. This is note number 1. Do you know how to analyze the financial statement? Go to note number 1 and see share capital. Sir, equity share capital is there and preference share capital is there. What was the equity share capital at the start? 2 lakh. But it has become. So there is an addition of. Is it a cash inflow, cash outflow? Cash inflow. So plus 2,10,000. There you have to write. How we will be writing in the financial statement. There itself you have to note 2,10,000. This 2,10,000 should be from cash flow from financing activity. Comfortable? So in the cash flow from financing activity, we have to add 2,10,000. Hello, sir. Look at preference shares. 1 lakh has become 1,50,000. So there is an increase of 50,000. So 2,10,000 plus 50,000 comes to 2,60,000 is the cash flow from cash inflow from financing activity is equal to 2,60,000. Getting it? Now analyze the balance sheet. Come here. What was the opening capital? What was the opening share capital? 3 lakh. Closing share capital? 5 lakh. There is an increase of, have you all understood why there is an increase of 2,60,000? Because I issued equity share capital, I issued preference share capital, then I will get the money. Comfortable, sir? Coming to reserves and surplus, sir, what was my opening reserve? 25,000. What was my closing reserve? 35,000. Comfortable? Generally, you have to check that P&L is available or not. Is P&L available? No, sir. If P&L is not available, what is the rule? You have to take the difference between reserves. Difference between. That means, what is the closing reserve? 35,000 minus opening reserve. That means I have to start with 10,000. This will be taken as a net profit as per P&L account. Comfortable? Are you all really with me? So look at here, man. Go and analyze the note number 2. We already know the reserves and surplus. Sir, already last year closing reserve was 20. This has become the opening reserve of 25,000. Comfortable? Surplus in statement of P&L at the beginning of the year. Now profit earned is how much? 20,000. Out of that 20,000, you pay 10,000 dividend. Hello, sir. That means surplus in statement of profit will be 35,000. So I will be start with closing reserve minus opening reserve, which come to 35,000 minus 25,000 will be 10,000. But I will never say that this is a cash flow from operating activity. Correct? Because I would have received this 10,000 after debiting the tax. I would have received this 10,000 after debiting so many non-cash item, so many other activity item. Clear? That I have to remove the impurities to find out the cash flow from the operating activity. Shall I proceed? So I understood that 10,000 rupees is the difference in the reserves and surplus. Coming to trade payable, man. Trade payable is coming under what liability? Current liability. Current liability I will be adjusting in the cash flow from the working capital changes. Correct? Okay, man. I will be dealing this, don't worry at all, when I solve the question. Now coming to the asset side, man. What current asset? Non-current asset. Correct? PP 1,80,000 has become 3 lakh. There is no note has been given. That means there is an increase of PP. What you will understand? Purchases. So there is a purchase of PP to the extent of 1,70,000. Are you all really with me? Sir, this is current asset, man. Current asset means what capital? Working capital. Correct? This I will be adjusting the working capital changes. In which cash flow? Operating cash flow. But there I will not take the cash and cash equivalent, because cash and cash equivalent only cash flow statement. Yes, sir. So to the opening cash flow, I will be add or less the change in the cash flow. I should get the, so to the users of financial statement, you are showing that how that 90,000 has become 1,05,000. Correct? In a pakava. All other item I will be adjusting in the working capital changes. Notes to account, share capital analyze, reserves and surplus analyze. So you are having additional information. Dividend paid during the year is how much? Already it is there in the balance sheet. No. Less dividend paid 10,000 is there. No. Okay. From the current year profit, whatever you have earned, 10,000 rupees you have given as dividend. Good. Depreciation charge during the year is 40,000. So the balance available here will be after depreciation. After what? So this value will be after depreciation. Correct? So we have to prepare the PPE account to find out the correct item. Hello. Very normal basic question. I'll be filling the cash flow statement for the year 31st March. You also travel along with me. First I am calculating cash flow from the what activity? First tell me net profit. Sir, either I have to start with the net profit or I have to take the difference in the reserves. Correct? What is opening reserve? 25,000. Closing reserve. So what is the gap? So in the amount column, you can put it as 10,000. You can put it as 10,000. Sir, this is a net profit as per P&L account. Can I say that, my dear lovable students, this is cash flow from operating activity? No, because there are 3 impurities are there. As per AS, 3. Add dividend. Because If no dividend has been paid, hello sir, my net profit would have been more. Correct? Dividend paid is not a cash flow from operating activity. Dividend paid is a cash flow from financing activity. Dividend paid is a financing activity. So this is impurity number 1. Correct? How much? 10,000. So I should add back that 10,000. Are you all really with me? Okay, sir. 10,000 also I have added back. Hello, sir. Provision for tax. Take the provision for tax. Look at the tax. Provision for tax. What is dividend paid during the year? Below that note they have given. What is the dividend paid during the year? Depreciation charged, okay man. What is the dividend paid during the year? 10,000. Correct? In notes, have they said anything about the tax payment? No, sir. But in balance sheet, they have given. Look at the current liability. Look at the current liability. Short-term provision is provision for tax. 5,000 and 8,000. 5,000 and look at here. Look at the logic. Understand the logic. Listen. Just listen here. You will be having, sir, current year and the previous year. Current year and the... What is the current year? 8,000. Previous year? What we will do, previous year tax we will pay in the current year. Previous year tax we will pay in the... Why, sir? What is the logic, sir? Nothing, man. For our current year, we will do the business. Only after the end of the current year, we know the net profit. Correct? Then only I know how much is the tax payable. Are you really with me? Then in the next year only, whatever tax payable of the current year, we will pay. Clarity? So, sir, in the balance sheet, 5,000 rupees is the tax payable of the last year. That we would have paid during this year. So, in the cash flow from what activity? Operating activity. Finally, we will less the tax. We'll reduce the... Is it tax paid or tax payable? Tax paid. So, how much really in cash you would have paid the tax? 5,000. So, in the cash flow from what activity? Operating activity. Less what paid? Tax paid. You go and write 5,000 rupees in the bracket. Here you can write 5,000 rupees in the bracket. Less tax paid 5,000 in bracket. Are you comfortable? That means, look at here. Come on once again for the logic. So, last year tax payable of 5,000 I would have paid this year. So, I would have created a provision for tax 8,000 in the current previous year. Yes, sir. So, in my P&L account, to provision for tax, 8,000 would have been debited. Comfortable? Sir, is this a cash flow from operating activity? No, this is just a provision. This is just a provision. All the impurities should be added back. Actually, this is a non-cash item. Yes, sir. This I will pay only in the next year. That will come as tax paid from the cash flow from the operating activity. Comfortable? What I am doing, are you able to appreciate? So, what I have to do is, in the list of provision for tax, how much rupees should be added back? 8,000 rupees should be added back. Enapa getting it? Because that is just a provision, which is a dash cash item. So you may have a question, sir. So in the current year, you have not paid any tax. Sir, I have paid a tax, sir, but not 8,000. 5,000. This 8,000 I will pay in the next year. Comfortable? Proceed, sir. Now, net profit before tax and what item? Extraordinary item. So calculator, man. 10,000 plus 10,000 plus 8,000 comes to 28,000. 20. Actually, every cash flow statement should start from this point only. What? Net profit before tax and extraordinary item. Because actually tax is not a operating activity. But still we will show in the bottom of the operating activity. Correct? Correct? But P&L account has not been given in the question. I am having only reserves and surplus. That reserves and surplus means closing reserve, means after adjustment of everything. Yes, sir. Opening reserves and surplus means after adjustment of everything. Getting it? So I am helpless. That's why I have taken the net profit as the closing reserve minus opening reserve. I got how much? 10,000. Hello, sir. Yes, sir. They said that this 10,000 is after payment of dividend of how much? 10,000. Correct? First of all, is dividend payment operating activity? No, sir. So I can't say 10,000 is a cash flow from the operating activity. Because of that, I'm adding back the 10,000. Hello. Is tax payable provision debited to P&L account is a cash flow from operating activity? No. Hello, sir. Cash tax paid is a cash flow from operating activity. Okay, I can understand. But provision for tax debited to P&L account will never be a cash flow from. First of all, it is not at all a cash item. Should be in the back. Logic clear. So I am adding back that 8,000. So I got some answer called as 28,000. This is nothing but net profit before tax. And actually, this is my starting point. This is my. But in this question, there is no other way. If P&L has been given, I would have started from this point only. Yes, sir. Now I am going to remove the impurities. Clear? Now adjustment 4. Number 1, depreciation. How much is the depreciation provided during the year? So that 40,000 should be added. Yes, sir. So 40,000. Because this is a dash cash item. This would have been debited to P&L account. Because of that, net profit would have been reduced. Should not be reduced. I am rectifying it. Are you able to connect it? Okay, man. So you will get the operating profit before what capital changes. So 28,000 plus 40,000 comes to 68,000 is the cash flow from operating activity before working capital changes. Before what? Are you getting it? Now come on, man. Come on, 1 second. One more logic is there. Look at here, man. We are having working capital changes. We are having? You are having current asset and you are having current liability. Current asset and? Sir, from here onwards, I will tell you a simple logic. From here onwards, you see current asset means debtors. Current asset means? Current liability means creditors. Current liability means, sir, not only this current asset or current liability, still lot of items are there. I am representing current asset means debtors, current liability means creditors. Any problem? No, sir. Let me give you logic, understand. For example, opening debtors. What debtor? Is 40,000 given in the question. Closing debtor is given as, sir, 90,000 given in the question. 90,000 given in the comfortable? Okay. Sir, opening creditor, closing creditor. Opening creditor, they have given as 30,000 given in the question. It has become 70,000. It has become, this is the information. Actually, this information is given in the question. If you see, look at the balance sheet, debtor, trade receivable, 25,000 has become 1 lakh. Sir, is the debtor increased or decreased? Pakka? Okay. That is only I also done. 40,000 has become 90,000. Some figures I have taken. If you want, you can take the same figures also. I don't have any problem. 25,000 and 1 lakh. Okay. Opening is 25,000. Closing is 1 lakh. Even you are having creditors also balance given in the question. Look at the balance sheet and tell me what is the creditors figure. 60,000, 1 lakh, 50,000, 1 lakh 50,000. That means even the creditors is also increased. Enapa puridapa? Appreciating? Sir, tell me, just listen. Debtor. Debtor means from that guy I have to get the money. From that guy I have to get the money. Situation. Simple. Common sense. Okay. A person have to give me 25,000 in the start. 25,000 in the. But at the end, that guy has to give me 1 lakh. That guy has to give me. That means I would have given cash to him. I would have given. Are you really with me? So starting, he has to pay me 25,000. Hello, sir. Yes, sir. At the end, he has to pay me. That means I would have given him 75,000 to him. Correct. Comfortable. So this 75,000 will be a cash outflow. Cash from the operating activity. From the. Are you all really with me? Comfortable? Okay. Coming to the creditors, man. Sir, to X person, I have to pay 60,000 at the start. 60,000. Solle, 60,000 at the. But the end I have to pay him. Then during the year, he would have given some money to me. Yes, sir. Then only 60,000 will become 1,50,000, which is there is a gap of 60,000 minus 1,50,000 means 90,000. This is a cash. This is a cash. Comfortable. So I am consolidating. Hello, sir. In balance sheet, you may have two options. Either increase in the current asset or decrease in the current asset. Tell me. Increase in the current asset or which may be any item. Current, it may be debtors, which may be stock, which may be prepaid expenses, but we represent it as debtors. Current asset as debtors. Sometimes that debtors may increase or debtors may decrease. Correct? Either you may have increase in the what asset? Current asset. Or you may have increase in the current liability or decrease in the current liability. Comfortable? What example I gave for increase in current asset? No. 25,000 has become 1 lakh. If 25,000 has to become 1 lakh, there should be cash outflow or inflow? Outflow. Comfortable? Comfortable? Easy. Sir, now alternate example. Look at here. Opening debtors, closing debtors. Opening debtors is 1 lakh and closing debtors is 25,000. What is the scenario? No. He would have given 75,000 to us. So this is cash inflow. Enna comfortable appa? Easy appa? Coming to current liability, man, there may be increase in what liability? Look at this situation. 60,000 has become 1,50,000. So 90,000. Cash inflow. Cash inflow. Are you really with me? Sir, there is a situation where 1,50,000 was the opening balance and closing balance is what? 60,000. So there is a reduction of 90,000. Yes, sir. To X person, I have to pay 1,50,000 in the start. But at the end, I am liable to pay only 60,000. So there is a reduction of 90,000. This is cash. Comfortable. Comfortable. So you now tell me with this logic, one by one item. Current asset. Will I take the cash and cash equivalent? No, sir. Sir, I am doing cash flow statement, sir. How I will be taking this item? So I will not consider this item. Comfortable. 50,000 current asset has become 1,20,000. Cash inflow, cash outflow. Cash. So I have to put in minus in the cash flow from operating activity. What is that item? Increase in what? Inventory. How much? 70,000. Are you all really with me? Yes, sir. Look at the second item in the balance sheet. Second item in the balance sheet. What is the next current asset? Trade receivable. 25,000 has become 1 lakh. There is a increase in current asset. Okay, like fine. Trade receivable, current asset. Is it cash inflow, cash outflow? Cash outflow. To the extent of, are you understanding? So my dear lovable students, trade receivable 75,000 minus. Hello, sir. I will not consider the cash and because I am preparing the other current asset. 45 has become 78,000. That means there is increase in the current asset. It's a cash outflow to the extent of 30. So increase in other current asset 33,000. Are you really with me? So total to total will be 75,000 plus 70,000 plus 33,000 comes to 1,78,000. 1 lakh is the cash outflow. Correct? Because all are outflow only, no? Yes, sir. All are outflow only, no? But I am having operating profit before working capital changes to the extent of 60. So 68,000 positive is there. 1,78,000 negative is there. I will come at the appropriate time. The same way I have to adjust the what payable also, current liabilities also. Sir, I already adjusted the short term provision, sir. Yes, sir. This 8,000 I have added back, sir. Where? Non-cash item. This 5,000 I will reduce, sir. Tax paid below. Comfortable. But trade payable 60,000 has become 1,50,000, sir. Is it a cash inflow, cash outflow? Cash inflow. What's the gap? 90,000. So here I have to write increase in trade payable 90,000. Are you all really with me? So you tell me 68,000 minus 1,78,000 plus 90,000 means minus 20,000 is the cash used. Cash used. What is the technical word we will use? Cash used. Used. What is the technical word? Used. Cash used. In where? How much? Now less tax paid. How much? 25. So net cash used in operating activity will be totally 25,000. Are you all really with me? That means during our year, 25,000 rupees is the cash flow from the operating activity. Clarity? Now coming to the, sir, investing activity. Investing activity. You have to see the balance sheet. You have to see the balance sheet. Hello, sir. Balance sheet PP is there. I have to prepare the PP account. Look at here. Just be with me. Don't write anything. PP account. To balance brought down. By balance carry down. Which is nothing but opening balance and closing balance. By depreciation. Because depreciation will be credited in the PP account. Correct? How much is the depreciation for the year? 40,000. What is the closing balance? 3 lakh? 50. 3 lakh 50. What is the opening balance? 1 lakh 80,000. Can I add the credit side? Which comes to 3 lakh 90,000. Minus 1 lakh 80,000 comes to cash. 2 lakh. This will be the cash outflow. This will be there. So, I would have purchased, sir, purchase of PP is 2 lakh 10,000. Enapa clarity appa? This is cash inflow, cash outflow. Cash inflow, cash outflow. Cash outflow because I purchased an asset. So in my main sheet, sir, cash flow from operating activity I already finalized minus 25,000. Now investing activity, now I finalized 2 lakh 10,000. Correct? This ledger only they have presented as working note. Look at here, working note. PPE. WD means opening. To balance brought down, man. How much balance brought down? Closing balance. How much? 3 lakh 50,000. Correct? Look at here. Look at the ledger below. Sir, on the credit side, who also there? That's why they are add back depreciation. Comfortable? How much? 40,000. Total 3 lakh 90,000. This is nothing but the credit side of the asset account, right? Minus WDV at 3112. That means opening balance. How much? 1 lakh 80,000. So 3 lakh 90 minus 1 lakh 80. 2 lakh 10,000. By that way also you can find out. If you want, you can put a statement. Have you all understood now this working note very clearly? Okay, man. That also done, man. Done. Now the cash flow from the what activity? Financing activity. Financing activity already issue of equity share we finalized. How much? 2 lakh 60,000. Total is 2 lakh 60, but equity preference difference is there. So 2 lakh 10,000. Comfortable? Issue of preference share 50,000. These all are inflow or outflow? Inflow. Dividend paid outflow. How much? 10,000. Getting it? So 2 lakh 10,000 plus 50,000 minus 10,000 means 2 lakh 50,000 is the net cash inflow. Coming to the main answer, man. 2 lakh 50,000. So can you find out the net increase in the cash and cash equivalent? Yes, sir. You are having 2 lakh 50, but you spend 2 lakh 10. Sir, you spend 25,000. There is a increase or decrease? Increase of 15,000, right? So during the year, from total operations, that is all investing, financing and operating, we generated 15,000 rupees cash flow. Opening, what is a cash and cash equivalent? 90,000. So 90 plus 15, 1 lakh If you look at the balance sheet, what is the closing cash balance given in the question? That's it. My cash flow statement got tallied. Are you all really with me? Comfortable. Comfortable. Where students will spend their maximum time, I will tell you. They will be thinking that opening debtors is this, closing debtors is this, there is a increase in debtor, decrease in debtor. Hello? Have you all understood that part? Yes, sir. Still, I will give you a shortcut for your examination. Very simple, man. Shortcut. Okay? Sir, you are having working capital. Working capital classified into how many category? Two category. Current assets and current liabilities. Correct? You may have either increase in current asset or you may have either increase in current liability or decrease in current liability. Clarity. For current asset, for what asset? What asset? Look at the format, man. We were having format of the cash flow statement. That's what we have discussed starting. Correct? Yes, sir. For the current asset, look at here. Look at here. Sir, it is inverse relationship. What relationship? What relationship? That means, sir, very simple. If there is an increase in current asset, it's a cash outflow. You put it in bracket. So, increase means plus, you do minus. Are you really with me? If there is a decrease in current asset, you have to do add. That means don't put in bracket. Are you really with me? This is only we have done here also, man. Are you really with me? Look at here. Increase in current asset is a cash increase. I will put in bracket. Decrease, I will add. That means normally I will do. Hello, sir. Because current asset is a dash relationship. Inverse relationship. What relationship? Whereas what? Current liability is a direct relationship. What relationship? Direct relationship means, look at here. Increase in current liability. Sir, current liability increased. Cash inflow increased. Current liability decreased. Cash outflow decreased. Are you agree with me? That means if there is an increase in what liability? Current liability, I will add. Decrease in current liability, for me, I am immaterial whether what the wording is. Inventory. Okay, fine. Let it be. Inventory, let it be. It is a part of. That's it. Trade receivable. Current asset. Cash and cash equivalent I will not take. Other current asset. Let the name change. Rule same. Easy. Sir, now you tell me. Sir, I understood. I explained you the logic. Hello, sir. Still, I will go in deep in the coming question. First, you should understand how it has to be proceeded. That's what. So, my dear lovable students, 50,000 inventory has become 1,20,000 inventory. Actually, what happened to current asset? Increase in current asset. Inverse. Decrease in the cash flow. You have to put it as bracket. That's it. Hello, sir. You can save the time like this. Every other student will be thinking, what is inventory? AS2, cost or valuation, whichever is lower. It is why it is not written in the non-current asset, why it is in the current asset. Like that, no, they think, come on. Sir, trade receivable, 25,000 has become 1 lakh. There is an increase in current asset of 75,000. Opposite. There is a minus of 75,000. That's it, game over. Hello, sir. Sir, this is what you are doing, sir. Don't do difference, sir. Then it will not tally, sir. Correct, sir. Other current asset, 45,000 has become 78,000. Increase in current asset of 33,000. There is a bracket of, because if there is increase, I will do decrease. If there is decrease, I will do increase. Yarki current asset. But for current liability, I won't do like that. Yes, sir. Current liability, direct relationship. What relationship? Increase, increase, decrease, decrease. Are you all really with me? Look at trade payable, man. 50,000 has become 60,000 has become 1,50,000. Right, sir? Sir, there is a increase of current liability. There is a increase of cash flow. That's it, game over. I will not put in bracket because this is increase. But if it is decrease, I would have put in bracket. Comfortable. So what we have done, this is an overview question only. Don't worry at all. We'll be doing n number of questions. You'll be feeling, sir, the best out of the best in the cash flow statement. I'm guaranteed for that. For example, we are having additional question for practice. Hello, sir. Nearly 20 questions, 16 questions are there. 20 question minimum will be solved. All are Pakka, perfect question from the cash flow statement. 2 minutes, 2 to 3 minutes. What we have done is indirect method. Think of it, sir. Either you can start with the net profit as per P&L account. Sir, kadalli illa sir. P&L account itself not given, sir. Only balance sheet only given, sir. Take the difference between the reserves and surplus. From there, you have to start the proceedings, right, sir? What cash flow statement is saying that assume that net profit as the cash flow from the operating activity, blunder. Because that net profit would have been found out after debiting so lot of what? Impurities. Correct? Remove impurity. How many impurity? 3. Why? AS3. That's why, sir, operating, financing and investing. Because AS3. Oh, fantastic, sir. Are you really with me? Sir, in the schedule 3, you are having current asset. Yes, sir. Total how many item? 6 item. Correct? Okay. Quickly, I will ask you a question. What is item number 2? Item number 2. Because it is AS2. That is why it is 2. Are you really with me? We'll come at the appropriate time. We'll be, NSR, adding so many items. We'll be linking. Now only you are hearing what the subject is all about. If I say now also, you will not be able to appreciate or understand. If I say so many things also, you don't know those things. When I come, Varamari. Yes, sir. So I have started with the net profit as per P&L account. It contains lot of impurities. Impurity number 1 is non-cash item. Impurity number 2, other activity. That's what impurity number 2. 2 other activity. Correct? One is cash flow from the investing activity and cash flow from the, those item may be debited or credited to the P&L account. Remove it. Remove it. Hello, sir. Yes, sir. You will be getting the cash flow from the operating activity. Tappu. That is cash flow from the operating activity before working capital changes. I have to adjust the current asset and the current liability, right? Only 4 possibilities are there. Increase in current asset, decrease in current asset, increase in current liability, decrease in current liability. Pakka? I am least bothered about what is the name of the current asset, current liability. Hello. If it is an increase in, with regard to current asset, I will follow a inverse relationship. Correct? Because current asset increases, cash flow decreases. That is the reason. Whereas with regard to current liability, I will follow a direct relationship. I don't really with me. I am saying that there is an increase in current asset. Decrease the cash flow. Decrease in current asset. Increase the cash flow. That's it. Hello, sir. Increase in current liability. Increase the cash flow. Decrease the current liability. Decrease in cash flow. You will be getting the cash flow from the operating activity before taxes. Yes, sir. I have to reduce the tax paid. That tax paid 2 column will be there. Last year column, current year column. Current year column will be added back as provision for tax. Last year column, I will be reducing the cash paid. Because last year tax, I will pay during the current year. Hello. I will get the cash flow from the operating activity. Now I have scrutinized the P&L account. I have scrutinized the working capital of the balance sheet. Pakka. I will individually check the fixed asset. I will individually check the equity and liability. Correct? Plus, I would have removed so many impurities saying that a operating activity will say that you are not form part of our family. We would have added back so many items. Interest paid would have been added back. Now it has to be shown as cash flow from the financing activity in bracket. Correct? Yes, sir. Sometimes profit on, sir, fixed asset would have been credited to the P&L account, right? Operating activity will say that, gee, don't come here. Because I am cash flow from operating activity. But cash flow from the investing activity will say that, please come here. Are you really with me? So I have to include that cash flow there. Comfortable. This is just a start question, man. We are going to start the chapter, not the end. Start the chapter cash flow statement. I am with you, sir, from your heart. Anybody is there? Where is a grand clap?